Hi guys, I welcome all of you all to this GST marathon. I will be covering everything. If you watch my last marathon, which was yesterday, you can get it from our YouTube channel. And also today, I will be covering everything, including the ITC sums, including all the sums. Towards the end of my video, I will also cover the past exam questions and all the sums types will be covered. So by yesterday I had covered till section 11. Now I'll be covering with section number 12. Whenever we start, we put up the word exemption so that we know why we are studying for. Exemption is getting 60 up in your exam minimum. Okay. So on this positive note, let's start with section 12. Hi. So we'll be starting with time and value of supply, your section 12, 13, 14 and 15. 12 talks about the time of supply of goods, 13 talks of the time of supply of service, 14 talks whenever there is a change in rate, and 15 talks about the value of goods. So first we'll be seeing the time of supply. Now, before understanding the time of supply of goods and service, we need to understand what do you mean by the term time of supply and why are we even studying it. So very simple. The reason is very easy. Now, once we know when the supply is given, accordingly we can compute the due date, the time for filing the returns, etc. So we require the time. For example, if I say that the supply was given on 5th January, automatically I know that the due date will be next month. But if I tell you that the time of supply is in February, you will say that the due date will be in March. So from the time of supply, whenever the supply is given, from then we can calculate the due dates, etc. Now, whenever supply is given, when I say supply, in simple words, I'm talking of a sale. Whenever there is a sale of goods or service, what happens is there are multiple events that happen. It's not, you can't identify the direct time of supply. Why? Because it is possible that the invoice must be raised on one day, the payment must be there on another day, and actual delivery of goods will be on another thing. So the transaction can have multiple dates. So then which time can I say that is the point in time where supply is given? So time of supply gives you rules. It gives you rules where it says that if you follow these rules, this is the deemed date of time of supply. For example, applying the rules, if I come to note 29th March, whichever is earlier, if they give the rules and applying the rules, you come to know that 29th March by the rules is coming that this is the time of supply. This is the deemed time of supply. Then all the provisions of payment of duty, due dates, etc. will begin from here. That's why it's very important to know in which point in time was supply deemed to be given. Now there are three dates, there are three sections for this. One is your section 12, which talks of your time of goods, 13 talks about times of service, and 14 talks about whenever there is a change in rate. Now one short question is there, more than one also can come from this particular thing. We'll be covering everything. Now time of supply has total 6 sections. Okay, so first is time of supply has 6 subsections. Subsection 1 talks of the liability to pay, which I just told you. I'll explain all of this, but let's understand each one, a basic idea. So the time of supply is whenever there is a time of supply, the liability to pay will arise on that day. So liability to pay arises on time of supply. That is why it's very important to know when was supply given. Second, time of supply in case of forward charge is given in subsection 2, or for reverse charge is given in subsection 3. For vouchers it is given in 4. For other etc. cases given in 5. And whenever there is a late fees, interest, etc. collected, the time of supply for that also has been given. Okay, we will see each one. Now first, section 12 subsection 1. What does it say? The liability to pay. So it says that the time or the liability to pay arises on the time of supply. The liability to pay arises on the time of supply, and that's why it's very important to know when is the time of supply given. Because moment I come to know that this is the time of supply, this is the point in time when supply was deemed to be given, from that day liability to pay arises. Clear? Very simple, very easy. Let's move ahead. Now this will be same for both goods, services, exactly the same. Okay. Now we see for forward charge. Now forward charge means where the supplier is liable, what will be the time of supply. This is the main rule. Okay, market is important. It's very simple. They had given you LIP. What they had given you? LIP. Earlier of LIP was the time of supply for forward charge. LIP was given for time of supply for forward charge. L was for the last date for issuing invoice as given under section 31. So when you go to section 31, you will get certain rules where you will come to know that this is the last date to issue the invoice, or the actual date of invoice, or payment, whichever was earlier. Then a notification came, notification number 66. They said that GST is not applicable for payment of advances on supply of goods. So this was not removed. So now for time of supply for forward charge in case of goods, this is the ultimate rule. You will see the last date for issue of invoice and you will compare with the date of invoice. Whichever is earlier is the time of supply. Right now you will not perfectly understand till we do the sums. So here very simple. What is it? LP, last date for issue of invoice or date of invoice, whichever is earlier is actually the time of supply. Clear, sir? Very easy. Let's move ahead. What is this last date? We will see how the last date is computed. It is different for normal goods, it's different for continuous supply, it's different where approval of goods are involved. So section 31, imagine if I come to know this is 2nd June and this if I come to know is 1st June. So the 1st June will be taken because whichever is earlier. We'll do the sums on it, you don't have to worry. Right now just the basic understanding is more than enough. Then comes if I made a excess payment up to rupees 1000, the due date for this amount will be as per the supplier when the invoice has been issued for this excess supply. Sir, explain. Now pay attention to what I am saying again. Now imagine if there is a payment of bill of 9080 rupees made. 9080 bill is there. So I don't have change. So I made a excess payment. I'll make an excess payment of the balance amount. I made a payment of, let's say 10,000. So what is happening? I've made an excess payment. I say in my future purchases adjust this extra amount. So when I make a excess payment up to rupees 1000, then the due date for this excess payment, okay, for this 20 rupees will be the date of invoice with respect to this excess amount. So whenever this extra goods have been ordered, okay, where I'm going to adjust this excess payment in future, that date will be the time of supply. Right now I just want you to understand the rules. Even if you get some understanding, it is fine. When I'll teach you the sums, you will perfectly understand and happily with a smiling face solve all the sums. Okay. Now supply, when they say the payment is doesn't matter here because they've given excluding the payment. Now for reverse charge, okay, for reverse charge, what was this? They have given the word TRP. TRP. What is the thing? Whichever is the earlier of these 3 dates. Okay. T is for 30 days from the date of invoice. So date of invoice plus 31 days when you have received the goods, receipt of goods, and when you made the payment. Okay. Now see, understand, for reverse charge, what is the rule given? T, that is 30 days from the date of invoice, date of receipt of goods and payment. Now understand from the recipient point of view. If I am the recipient, in RCM always a receiver pays the goods, pays the tax. So if I am the recipient, what all will I know? I will know when I receive the goods, I will know when I make the payment. Okay, and next year in date of invoice plus 31 days. So 30 or 31 days, very simple. What is the line given? Date immediately following, immediately coming after 30 days. So therefore the answer is date of invoice plus 31 days. So earlier of these three will be the time of supply for RCM in case of goods. Don't worry, when we are doing the sums, all you will know perfectly. For vouchers, now vouchers are very simple. Whenever vouchers are issued, Amazon vouchers, Amazon gift cards, etc. Let's say a gift voucher is issued. Okay, we have all of this. If this gift voucher is identifiable with the supplier, or not identifiable. Okay, it is not identifiable. So we'll see the time of supply. If it is identifiable, for example, if I give you a Titan gift voucher. So you know that you can go and buy a Titan watch from there. You know that Titan is a recognized supplier, or a Domino's gift voucher. You can identify the supplier. So the time of supply in case of identifiable goods will be on the date of issue. So whenever these vouchers have been issued, given, moment that time, the time to pay the tax will arise. But if it is not identifiable, I don't know where he will go and buy. I don't know who is the supplier. For example, Amazon gift cards. Now Amazon itself is not a supplier. Amazon is a web portal. It's a e-commerce portal on which other suppliers are there. So with the Amazon card, I can buy a prestige cooker. I can buy a fridge. I can buy a pen drive. I can buy different things from different dealers. So I don't know at the time of issue who is the supplier. So very simple. They say that listen, if it is there, then wait till the redemption. Wait till he uses it. So here it will be the date of redemption. Logic is very simple. If you know the supplier, then immediately at date of issue. But if you don't know, then wait till he redeems it. This will be the time of supply. In residuary cases, when returns are to be filed. Now 5 is not important. 6.1 let's understand. 6 is very simple. For interest, late fees, etc. So we saw that when you read the valuation rules, it says that even if the dealer is getting interest, late fees, etc. he is getting. So whenever he gets this extra late fees, interest, that date when he receives is the due date. That is the time of supply for that amount, for the late fees, etc. So very simple. The late fees or for the delayed payment shall be the date on which he actually receives such additional value. For example, I levy a penalty on my customer for paying late fees. So whenever I get this extra amount, for this extra amount also GST has to be paid. The time of supply for this extra amount will be the date or when I receive this interest or payment. So when you go to look, okay, 12 subsection 1, 2, 3, 4, 5 and 6. Okay. Can you tell me all these 6, which is this? So this is saying the liability to pay. Whether you read section 13 or you read section 12 or 13, both have same provisions. Okay, only minor changes are there. In 2 and 3 rest, all the subsections are same. Liability to pay. This talks about forward charge. This talks about RCM. This talks about vouchers. This talks about residuary cases, and this 6.1 talks about whenever you receive a late payment, fees, etc. So for services, this is also same, this is also same, all this is same. Only for forward and RCM this is different. Rest section 12 and 13 is a replica. Forward charge we saw in this. When does forward charge come into play? I taught you it was LI, last date for issue of payment under section 31, or LI, or in RCM we had seen TRP, 30 days receipt and payment. So these three, whichever is earlier, will be the time of supply. Remember this is your, this is for goods. Okay, very simple. When we do the sums you will learn much better. Okay, now we say what was this section 31, when is the last date to issue the invoice? Very simple. Okay, so last date of issue of invoice has been given in different cases, different things. Okay, so first they have said that they've given different things for different persons. So in case of normal goods, in case of continuous supply and in case of approval, goods sent on approval. Very, very simple. So we are seeing the last date for issue of invoice. Last date for issue of invoice, what is it? Because you have to compare with date of invoice, if you remember, in forward charge section 12 subsection 2. So what it says in normal case, very, very simple. If there is a movement of goods, okay, this is in case of normal goods. When we do the sums, you can be with me. So situation, when there is a movement of goods, actually goods are removed from one place to other. Date of invoice will be whenever the goods are removed for supply to the recipient. For example, if I made an interstate sale, I have made an interstate purchase, from that go down, when it removes, it comes out. That will be the movement of it coming out to be delivered to me. That is the last date to issue the invoice. In any other case, for example, there is no movement of good, for example, over the counter. So when there is no movement only, so at the time of handling it to the customer, time of the delivery of goods. So we have to first see that whether there is a movement of goods. If there is a movement of goods, the moment the goods are removed, that will be the last day to issue the invoice. If there is no movement only, then whenever you handed it over to the customer. Very, very simple. In case of continuous supply of goods, now let's see, continuous supply of goods means there are recurrent kind of service goods that will be provided. For example, if a builder, real estate builder, has entered into a contract with a cement manufacturer that keeps supplying me goods for the entire year. So if you see that this contract is not one time event, it will keep on going, transactions will keep on happening during the validity period. So this is recurring services or goods will be given. For this, they are saying that whenever you are regularly ordering, there will be successive statements that will be issued, or there will be successive payments that will be involved. So whatever is the case, either continuously every fifth the note invoice is issued. So we will take each such date as the last date to issue the invoice. Or whenever payment is made, for example, I have entered into a ECS where a electronic clearing system automatically or 10th auto debit it will be done. So then when each such payment is done. For example, if I bought goods, you know that automatically you give the right for auto debit. So whenever this, depending what kind of scenario you have, that will be the last date for issue of invoice. Now when the goods are sent for approval, very, very simple again. If the goods are sent for approval, for example, goods are removed, but if not for purchase, you are sending them, see if you like it, you see the sample, if you like it, you let me know. So now, in case of approval, we are saying, listen, the last day to issue the invoice is when the customer has approved the goods. So we dispatch it to the customer, I give it to him, so we wait for the customer to approve the goods. But if the customer has not approved within 6 months from the date of removal, so then we will say that this is the deemed date of removal and whichever is earlier. So the last date for issue of invoice, okay, invoice should be issued 6 months, or if the customer approves earlier, whichever is the case. Okay. Now why we wait only for 6 months? Because after 6 months we will treat it as a deemed removal. Okay, that is important in approval of goods also. So now that you understood the provision, you got some basic idea. Now we will solve the exam questions. Okay, I want you to solve with me, put it your this also with me. Okay, let's see. Now time of supply of goods. Now we are seeing time of supply of goods when there is a movement of goods from one place to other, the movement is there. So we saw again there is a movement of goods. So again I will think it is from your section number 12 subsection 2. This is a case of forward charge. In forward, because in reverse charge they will say this is falling under RCM. So then I will say that in case of forward charge, sir has thought last date for issue of invoice under section 31. I'll compare it with the date of invoice. Last date when movement is there whenever the goods are removed. Rest nothing matters, right? Whichever is earlier. Payment doesn't apply here. So if they have given you payment, I will cancel it. It doesn't matter only in case of forward charge of goods. Removal, date of removal I will see, and the date of invoice, whichever is earlier. From these two, which is early? This is early, so this will become the time of supply. In this scenario, which is earlier? this is earlier, so this will become the time of supply in this case. Between these two, either of them, so 411 will be the time of supply. So very simple, very easy. Okay, we've completed. Now we see the next thing, time of supply when there is a movement of goods. So again, same concept. Let's see if you can try it. What will be there? First, whenever there is a forward charge of goods, okay, simply I'll cancel payment because payment has been removed. Advance payment is not to be considered as per notification number 66. I will just say earlier between these two. So which is early? This is early. Between these two, which is early? This is early. That's it. This is the time of supply. Sir, is it this simple? Yes, it is very simple. You will find it even more simple because I am teaching you. Okay. Now let's go to the next illustration where it involves movement of goods. Again, payment doesn't matter, only credit in bank account doesn't matter. All I need is, okay, the due date. So they have told you already the last date to issue the invoice or the date of invoice, whichever is earlier. So here this is early. Between these two, this is early. So this will become the time of supply. It's very simple sums, very easy sums if you know the law. Okay. Now go to the next one where there is not involved movement of goods. Like we saw, same thing. Over the counter sale. So in over the counter sale also, concept is very simple. Payment I will immediately cancel. It doesn't matter. They are trying to confuse. All we need to do is see the date of invoice and when the goods are made available to the recipient. Okay, as per section 31 we've seen. So whichever is earlier. This is earlier. Between these two, this is early. And between these last, whichever is earlier. So it is this simple that this is the time of supply. Now moving forward, okay, now this is an exam question I want you can try. Okay, now this is an exam question. ABC limit, this is how the exam questions will come. Okay, now what does it say? That ABC Limited supplied goods under a contract to be delivered in a factory. The goods were removed from the factory of this date. So we need a date of removal and were delivered. So when there is a movement of goods, we are only concerned with when it is removed. The invoice was 18 September and payment was this date. Payment doesn't matter only. Entry in books of account, that all doesn't matter. Only two things I need, invoice date and the last date. So between these two, which is earlier? Answer will be 9 September. Clear till here? So that will be the due date. Okay. So like this, one last one, I want you to put in the chat box. What do you think is the answer? Okay. So this is it. You will put the answer. Same question, supplied goods to XYZ under a contract to be delivered at the factory of the buyer. Goods were removed. So removal date I want. Delivered doesn't matter when there was movement of goods. Invoice was on this date. So whichever is earlier. So it will be 9/8. This will be the answer. Clear till here? So extremely baby sums are there. Now coming to continuous supply of goods. So normally students get confused in the continuous supply of goods. Okay. So I will explain you this technique for continuous supply also. Let's see. Now in continuous supply, sir had taught two things, that in continuous supply, pay attention. I want you to pay attention to me. Stop what you're doing. Listen. In continuous supply, students get confused. I have a very simple hack. The answer will get done. So when we see continuous supply of goods, in that case we are trying to find the time of supply, right? So the rule is very simple. The last date under section 31 or the date of invoice, whichever is earlier, will be the date. Yes or no? Yes sir, very simple. When you go to continuous supply, what is the last date given? Whenever statements are issued or whenever payments are made, regular payments are made. In goods, whenever it comes to goods, okay, whenever we are seeing forward supply, they had simply said that ignore the payment element. Ignore the payment element, right? Payment is not to be considered only in forward supply of goods. So we will simply see the statements when it is issued and we'll compare it with the date of invoice. Sir, what? In the continuous supply, the last date they have given you when successive statements are there or successive payments. Now payments has been specifically exempted under 866. So ignore it. Don't see it only. It doesn't matter. Whatever is written. This is given but separate exemption notification is there. So all I have to see is two things: statement when successive statements were coming and date of invoice, whichever is earlier. So let's see if we can solve. Okay, once you solve, okay, let's see. Now what do I require? It is continuous supply of goods. The following shall determine if there is a continuous supply of goods. So receipt of payment again will be cancelled. In forward charge of goods, it has been excluded as per notification number 66. Then this statement of accounts again doesn't matter. All we need is removal of goods and date of invoice. So again, since they haven't given you, this will be seen. The statement of accounts when these successive statements are issued. Okay, now which is earlier between these two? So removal of goods also doesn't matter, because in continuous supply, statements is given for the last date and invoice is given. So between these two, which is early? 1 is earlier. Between these two, which is earlier? 5 is early. And between these two, which is early? 5, 2 is early. So if you will see the answer will be 1, 5 and 5. See here, 1, 5 and 5. I hope the concept is clear and made very easy. Sir, what about sent for approval of goods? Okay, now pay attention for this also. Same concept. For approval of goods, they said 6 months. If 6 months it is not given, it is considered to be deemed supply. What does it mean? Remember, they had asked in the exam that if it is not given within 6 months approval and customer has kept, that means he has approved it only. 6 months no approval, disapproval given, so it will be deemed that it is approved. Now what is the rule for this? Same thing for approval system also. Same thing is there. What is the same thing, sir? Date of invoice or the last date. Last date for issue of invoice as per section 31. Here it says approval or 6 months from dispatch, whichever is earlier. So first I will find this. When did the customer approve? Or 6 months, whichever is earlier. I'll figure out a date. I'll compare it with the date of invoice. Concept clear? Yes, sir. When we do sums, we'll understand better. Okay, now this is an exam question. Okay, this is exam question. Let's see. Suppose one dealer has sent some goods to another dealer. One dealer has sent one goods to another on approval basis in absence of the confirmation even after 6 months. So they have said that even after 6 months, no approval is given, it will be treated as deemed supply. Very good, very easy. Now we see the sum. Okay. Determine the time of supply on approval basis. So first, what I require? Date of invoice. I require date of invoice. Second, I need to know when was the goods, what they have said, 6 months from the date of issue, invoice. So let's say, what they've given, invoice has been issued or 6 months from the date of removal. So 6 months from date of removal I need. So I'll see date of removal. 6 months from date of removal or date of invoice, whichever is earlier. So I don't need to compute only, because already date of invoice is earlier. If I go 6 months ahead here also, I don't need to do calculation. Accepted by the customer is also on 5th. So which is earlier? I will compare these two. Accepted by the customer, because he has accepted within 6 months. He has accepted within 6 months. So date of acceptance, I will take date of acceptance and the date of invoice, whichever is earlier. So between these two, the answer will be 5/12/2021. Concept clear? So I will see the date of removal, 6 months, that is the maximum date. If customer has approved earlier, I will take that approval date and I'll compare with the date of invoice. Very simple, sir. The next one. Okay, let's see the next one, and I want you to attempt. How will you attempt? These are all exam questions that I'm doing. Okay, so very simple. What we'll do is, date of invoice is needed, right? Removal is on 1/12. Did the customer approve within 6 months? Accepted? No, so he did not accept within 6 months, right? Because December, January, February, March, April, May. So he should approve by May, but he is not approved. So we will take May or this, whichever is earlier. So obviously this is there, so I'll have to take this plus 6 months, right? So date of removal plus 6 months. So I will take December entire month. December will be there. Okay. Then 6 months, right? December, January, February, March, April, May. So it will be, he has accepted on 1st December, so full December month, and the answer will be 2nd May, right? 2nd May. So this will be taken as, because issue of invoice is also after May. Clear till here? So this is a important, please understand this case law properly, okay? Then comes in case of small advances. I told you, if I've given a small advance up to 1000, I must have bought some goods, some chutta paisa, some basic amount. I said you keep this amount up to 1000, whichever is a small amount. You adjust it later when you are supplying me goods. So whenever you supply and adjust it against this invoice, whenever you do that in future, that is the time when invoice is to be generated in future. Okay, so they are given a very interesting example. Payment, see, the bill was of 15,750. Payment he made, pay 16,000. So 250 extra. He said that this extra payment of 250 you adjusted against future purchases. So what is the time of supply for this 250? This 250 will be whenever for this excess payment goods have been supplied, that day the invoice should be done for this excess payment. Sir, the time of supply in respect of excess payment shall be this date when the invoice relating to the next supply is raised. So this is what they've said, that in the future he made the supply on this date, 1/1/2018. Very simple. In RCM sums, we did forward charge. In forward charge, payment is not considered for goods, but in everything else, in services is counted, in even in your RCM it is counted. What was the provision? Quickly. So the provision was also very simple for RCM. They had given, think from this recipient point of view. What will the recipient know? Recipient will know when he made the payment. When he made the payment, when he received the goods, he will know. And invoice is 30 days from the date of invoice. So date of invoice plus 31 days. So date of invoice plus 31 days, whichever is earlier is the time of supply. Then when they say payment also, they will say payment is made or entry in books of accounts, or if I'm entered inside, or actual payment, whichever is earlier. For example, actual payment is not made, but I've made an entry in the books. So whichever is earlier we will take for payment. So earlier of these three, let's start. Okay, I need your help in this. So please tell me. First is date of invoice plus 31 days. So we'll take date of invoice plus 31 days. This calculation only do in the last if needed, because earlier of these dates. So if there is anything earlier than this, we will not have to calculate. Date of payment and date of payment debited in bank account. So whichever is earlier. So this is earlier, payment is done. Books of account, or when this is done, we'll take it. Then compare it with the receipt of goods and compare it with date of invoice plus 31 days. Now I don't need to do that 31 days because it is going to fall after these two only, and we need the earlier of these 3 dates. So the answer is 5/10. Did you get it right? Yes or no? Okay. So 5/10 is sorted. Clear? Now coming to the next one is this one. Please you try and let me know. What is this in RCM? How will you write? I have taught you it should be earlier of thing in RCM. What will the recipient know? Recipient will know when he made the payment. Recipient will know when he received the goods. And invoice plus 31 days. Invoice plus 31 days. The 31 days addition only do if required. Otherwise mostly it would not be required. So payment is when earlier of these two. So this is done. Receipt of goods is this. and invoice plus 31 days. So this is the date of invoice plus 31 will definitely go into the next month, so not needed only. Earlier of these three will be 10-10, the C1. Clear till here? This is how you solve. These are exact exam questions and this is how it is going to come. The next one I want you to try, and all of you all will put in the chat box. I'm not going to tell. I want you all to say option A, B, C, D. Put the option in chat box. I'm not going to tell you. Okay, I'm not going to solve it also. Very good. So let's see what is the answer. I told you in RCM I would know payments in first I have to take earlier of the payment or in the debit in the books of account I've taken. Then I'll see receipt of goods and then I will see date of invoice plus 31 days. Okay, now date of invoice plus 31 days goes in November ahead. Okay, so then the earliest will be 15/11. Okay. Oh, this is the receipt of goods. No, we require the payment, date of invoice and receipt of goods 15/11. Okay, correct. So agreed. So this will be the case where I'll have to add up. So I will come to know it will be on 1st November 2021. Okay, because this is coming earlier than 15 and 18 also. Clear till here? Very good. Okay, well, I've got it right. Moving forward to the next also, this is also very simple. You will be able to solve all of this. In case of vouchers, I told you now vouchers, late fees, everything will be same in case of services also. So now you just have to see in case of time of supply, is it identifiable? Can you identify the supplier? If yes, then the date of issue of the voucher is the time of supply. In all other cases, it is when you actually use it, swipe it, redeem it. Okay, so let's take this example. Let me know if you can solve it. XYZ Limited has purchased from its customers 100 vouchers worth 1000 each from Adidas, a footwear. Now we know that Adidas is a clear, you can identify it. So whenever it is issued, it was issued on so and so date, that will only be the time of supply. Nothing more to know. If it is identifiable supplier directly, it will be the time of supply. Okay, then comes late fees whenever you receive such late fees. So I have finished entire time of supply for goods. Now I'll do time of supply of services. Very simple. All the points will be same except point 2, subsection 2 and 3. Rest all the other points, internal points will be same. Okay, so first is first will be your liability to pay, exactly same point as earlier. Excess payment, same as earlier. Date of payment, as we always do, it should be earlier of, whenever you have to say date of payment will be earlier of whenever debit has been done or actual entry in the books of account. So whichever is there earlier, same as before. Then even vouchers is same, residuary is same and special is same. Only thing what is new and which they ask is associated enterprise. Associated enterprise, they will ask you, they will ask for forward charge, the calculation, and for reverse charge. Okay, that is it. Only 3 things you need to know in your time of supply of services. So let's see, time of supply of services, 3 things I have told you to know and note it down. First is for forward charge, second is for RCM, and third is for associated enterprise. And third is for associated enterprise. Okay, so let's see. Time of supply of services. These three you know. I wanted to make a note whenever I'm teaching you, write it down, and that's it, you're done. Then you will be able to solve all the sums. Let's go for forward charge. In forward charge, what they have said, very simple. Is the invoice raised within time under section 31? Now for services, separate timeline has been given, which is actually 30 days in case of normal cases, and for NBFC, for banking company, insurance company, 45 days. I'll teach you, don't worry. Right now, is the invoice raised within 31 days? If yes, then time of invoice or receipt, whichever is earlier. If invoice is not raised within the time limit, then date of provision of service or payment, whichever is earlier. Sir, can you simplify it? Yes, I'm going to simplify. Write it down with me. You will ask a question. Is invoice raised within 30 days? Okay, and for banking companies it is 45 days, but for all other except for financial institution it is 30 days. This will be the point. Is the invoice raised within 30 days? This is the time prescribed in 31. So you will say yes, or there could be a case of no. If the invoice is raised within the time, then we will take the date of invoice or the date of receipt of payment, date of payment, whichever is earlier. Very simple, very easy. Sir has taught beautifully. But if the invoice is not raised within the time, within 30 days in normal companies and in banking, insurance, financial institution companies, 45 days. If it is not raised within this much time, then we are not going to take the date of invoice because invoice is not issued within time. Then we'll say the date of completion of service, date of completion or provision of service, date of provision of service, provision of service, or date of payment, whichever is earlier. Clear? This is a simple baby rule which I have taught you, which you should know. Write it down. Is the invoice raised within 30 days? Yes. So very good. We'll take the date of invoice and date of payment. Is the invoice raised within 30 days? Answer is no. So then we won't take the date of invoice. We'll take the date of provision of service and payment, whichever is earlier. Your forward charge is done. Okay, beautifully done. Okay, very impressive, very easy teaching. Okay, next is in case of RCM, recipient. Now always I told you, recipient of service, what all will he know? He will know two things, that when he has received the payment, he will know that when he has made the payment. Recipient will know when he has made the payment, or invoice plus 61 days. Sir, 60 or 61, read the sentence. It is written the day following the 60th day. That means they're talking of 61 days. The day immediately coming after, following means coming after the 60th day, means the 61st day. So these two I will compare, whichever is earlier is the time of supply for RCM for services. Okay, so just remember the word SP. S is for 60 days, P is for payment. Okay, please write it down in a summary form. That's it. You will see and solve all time of supply services. And when it comes to associated enterprise, associated means holding subsidiary, when they are connected with joint venture companies, etc. So for them, what is the rule? That is also given very easy. Where the supply of services located outside India, either of the two. So associated enterprises, one is outside India, another one is in India. Then only one thing you have to see. So if they tell you associated enterprise, then the rule becomes very simple. You don't have to apply additional rules. Only payment part you will see and over. See, what do you mean by associated enterprise? There is Tesla USA giving service to Tesla India. Right? So what happens is, one is outside India, the other one is inside India. So they both are associated enterprise, but one has to be outside India. Okay, so remember this, associated enterprise means where one is located outside India, one is located inside India. So for them, they have given a very simple rule that entry in the books of account of the recipient or date of payment. So whenever I made the entry or payment, whichever is earlier is the time of supply. Okay, so they made it very simple for you. So just payment part is only there for them. Only payment part is there. Date when you've entered in the books of accounts or you made the actual payment, whichever is earlier. So with this, I've finished the services part also. In this time of supply, they are saying for the time limit, as I told you, last date to issue the invoice in normal companies 30 days from the date of the service. In case of banking, insurance and other company, it is 45 days. This they asked in the exam, last exam. Then in continuous supply, when there is a more than 3 month service regular, like your gym membership is a continuous supply, your internet connection, your mobile services are regular services that you are availing. Even coaching industry is a continuous supply which goes for more than 3 months, right? So unless you're doing a marathon where suddenly some magical person finishes the entire portion in one day. Okay. So the situation is, in this case, if there is a payment involved, then the date of payment. If there is not ascertainable, if there is no payment ascertainable, then the date when you receive the payment. If due dates are specified, then we'll take the last date to issue the invoice, the date of the due date. If due date is not there, then whenever payment is being done. So very simple. This is the last date to issue the invoice for continuous supply. Okay, because we always compare it with the other thing, we require last date and payment. So here again they're saying payment to get set off only, it will be payment only. If it is not ascertainable, when the payment is made. In the third case, when there is a link to completion of an event, then the date of the event. For example, if a marriage event managers are there, the moment the event gets over, by that is the last date when the invoice should be issued. In case of cessation of service, so when it ceased to exist, okay. For example, there has been a stop work notice that listen, now don't continue the work. So for how much ever work has been done, we've done in Contract Act also something called as quantum merit. Pay as much as work has been done. So if imagine there has been a dispute and in between only I have stopped the work halfway. So at least for half of the work I have to make the payment. When the last day to issue the invoice for that half work is when the it ceases to exist. The invoice should be issued when the supply ceases to exist to the extent of supply before such cessation. Means for how much ever work has been done, moment it has been ceased, you have to give. So for an example, there was a contract, it was starting on 1st August, it was going to complete in 2018. But was stopped in between in November. So the last day to issue the invoice for that work that has been done is on 1st November when there was cessation of work. So in cessation of work, you will see to the extent the supply is made before the cessation is the last date. Very, very simple. Practical questions also we can do. Sir, is it this stuff? I'll make it simple for you. Don't worry. Okay. If you understand this table, everything will be done. Okay. Now pay attention. They can ask you. Okay. What they are saying is actual provision of service or date of invoice or when the payment is received. So this they've given date of invoice, payment received and actual provision. So what is this? I just have to ask. This is the case of forward charge, reverse charge they would have told you. Okay. So forward charge, I have told that I will ask a question. A question will be framed. Is the invoice raised within 30 days of provision of service? So is the invoice raised within 30 days? Yes. This is the 10th is the provision of service. Invoice is raised in 20 days only. So we'll take date of invoice and date of payment, whichever is earlier. So between these two, 15/12 is the time of supply. No, which is earlier. So this is 12. So the time of supply will be 30/11/2017. The second case, again I will ask a question. Is the invoice raised within 30 days of completion of service? So yes, it is. So I'll take the date of invoice completed with the date of payment. So whichever is earlier. So here the answer will be date of payment will be the right answer. Okay, here this is the right answer. Here this is the right answer. Then in the third scenario, where there are part payments has been done. So when there is a part payment also, you don't have to worry. Just think as it as an independent transaction. this becomes like an independent transaction. So what will be the case? My question, same question I'm going to ask, is the invoice raised within 30 days? Answer is yes. So we'll take date of invoice. Okay, we'll take the date of invoice and compare it with the date of payment. Now, which is happening earlier? So for the first part payment, 6/11/2017 will be the date, the time of supply. In the second case, is whichever is earlier. So which is early? This is early. So this will be there for the part payment also. Clear? Whichever is earlier we will take into consideration. Now we are going to see the next one. Is the invoice raised? Answer is yes, invoice is raised. So we will take this. Compare it with the date of payment. So for the first part payment 6/11 will be there. Whereas for the second part payment 16/11 will be there. For third case, okay, so very simple. The same thing is going on. There's nothing complicated in it. Okay. Now when we see the sixth one. Now 6/1, same concept, we'll be moving. Okay. Is the invoice raised within 30 days? So 30 days is on 10th, 12th. So the answer is no. So then we'll take the date of completion and compare it with the date of payment, whichever is earlier. So 10/11/2017 will be the time of supply. Okay. Same I will see these two. Now is the invoice raised? Answer is no. So we'll take the date of completion of service, compare it with the part payment. So part payment is received, so it is earlier part payment. So this will be there for this part payment. This is the time of supply. Now between this and this, which is early, so this will be the time of supply for the second part payment. Okay, very simple. I've explained it well. You will be able to understand. Okay. Now this is the exam question. I want you to attempt and tell me what is the answer in the chat box. I want you to tell me what is the answer in the chat box. A, B, C, D. I'm not going to tell you. Read it up and tell me. Very good. So let's see what is the answer. The answer is very simple. I will ask a question. Okay, I have taught you all. Is the invoice raised within 30 days from the provision of service? So value of service rendered is this much. Date of the invoice is this much. Advance received on so and so. Balance received on so and so date. So they haven't given you date of service. So we'll see date of invoice here. Compare it with the payment. So payment received is here on this date and the balance amount is received here. So the total amount is how much? 1,18,000. 20,000 has been received on 20th August. And the balance amount is how much? 98,000. 98,000 has been received when? On 7th September. So this is the part payment dates. We have to compare with the date of invoice. Now 30 day this completion not there means the date of invoice, and this only I'll compare. Is the invoice raised? So they have not mentioned only. So they are given. We'll take date of invoice assuming that the invoice is on time because completion date is not given. So date of invoice is when? 5th September. 5th September. I'll compare this 5th September with this part, okay, with the first payment. So each one has to be treated independently. For 20,000, whichever is earlier, August, September. So this will be 5th September. For 20,000, it will be 5th September. And for this will be August, September. So for 20,000, we will take 20th August, and for this will be 5th September. See, what is the very simple for 20,000? This is 26th September, right? Or 20th August. So I'll compare whichever is earlier. All I have to do is whichever is earlier, right? So for 20,000, which is earlier? August, then comes September, na? So for 20,000 will be 20th August. And between 5th and 7th September, which is earlier? 5th September. So for that second part, 98,000, we will take 5th September. Concept clear? Yes or no? We won't take 7 because it is later. Date of invoice and the date of payment we have to see. C1 is the right answer. Okay. Now very simple. Similarly, I have explained you continuous supply, everything you will be able to do. Okay. Now similarly, we'll do for RCM method. Okay. Now in RCM, reverse charge mechanism, what was the rule? RCM, I told you SP. In RCM for services, I told you it was 60 days from the date of invoice, or P, date of payment, whichever is earlier. This was actually date of invoice plus 61 days and date of actual payment, whichever is earlier. This was the rule. So let's see how we'll do it. What I need is date of completion. You all are with me? Yes or no? Have you all got confidence? I need a yes or no. Is it clear? Now, when you look at this part, is from the following information given, determine the time of supply where the services are taxed on reverse charge mechanism. Okay. So in RCM, I have to compare the date of payment. I require the date of payment. Now date of payment, we have to see whether entry in the books of accounts or date of payment, whichever is earlier. So first I fix this. This is sorted. Payment has to be seen. Books of accounts or payment, whichever is earlier, will be the actual date of payment that I will take. Compare it with what? Date of invoice plus 61 days. So date of invoice plus 61 days. Rest nothing matters. Date of invoice plus 61 days. So date of invoice, obviously it will go further than that. So this will only be the answer. So I don't need to do that 61 days because it will be further only. I have to take earlier of them. So this will be the answer, 2021. Date of payment to the recipient, entry in the books of accounts. So correct. So what I have told is correct. Okay. It will be date of invoice plus 61 days. So date of invoice plus 61 days will go somewhere in December. And I'll compare it with the earlier of the two. So this will be taken in for calculation. Now the next one you try. Okay, now what is the thing? Next one again for RCM method. For RCM, what is the scene? That I will see the date of invoice plus 61 days. Okay, and I'll compare it with the date of payment or entry in the books in the accounts of the recipient, whichever is earlier. So this is early. I don't need to go ahead only because I don't need to do this addition because it's going to be ahead than date of payment, but we require whichever is earlier. So the answer will be B. Clear till here? Have you understood? Yes or no? Have you understood? Very, very simple. Same thing. Then comes a case of associated enterprise. Okay, let me show you a case of associated enterprise. Okay, very important. A short exam question comes from here. Okay, associated enterprise. What is it? That time of supply in case of associated enterprise will be I don't need to know anything. I just require date of books in the receipt of payment when it was done and when it was entered in the books of account, whichever is earlier. Debit in the books of accounts or the date on which payment is made. Nothing else I need. Invoice, consideration, nothing. Associated enterprise is a very simple rule. It's a bonus to you if it comes. Okay, this is the answer. Concept clear? Yes or no? Associated enterprise, I feel it can come in the exam, so please note it down. It is a plain vanilla example where they tell you Apte and Apte Limited is located in India and holding shares, 51% shares of this a US based company. So they become associated enterprise. One is a foreign entity. So 30/12/2017. Such a baby answer it is. Yes or no? And that is it. I've completed time of supply of services also. Now I'll do change in rate, which had come in the past exam question. Okay. Now what is the change in rate provision? Now section 14 talks about the change in rate. I will show you a very simple provision also. Easy for you to do. Now what happens in change in rate? Let me explain. What is the provision? That okay. So change in rate is when in between of a transaction the rates get changed. In between the transaction only the rates are changed. Then what is to be done? Beautiful, sir. Beautiful. Okay. So let's start. Now change in rate, what does it mean? Let's see. So first, if the rate, it is possible that in between of a transaction the rate changes and we are confused whether to use the old rate or to use the new rate. So they have given you, section number 14 has given you rules. Sir, what is the rules? Very simple. That you have to first see whether the change in rate happened before the provision of service or after the provision of service. So I will have to first see the provision of service. When was the service or when was the supply given? Then there are two more dates that I have to see: date of invoice and date of payment. Okay, when was the supply given? Okay, so this will have to be seen because there can be different events. At the time before the supply was given, the rate was 12%, but after the change in rate it became to 20%. So we are confused to take 12 or 20. So rule has been given. I will make it very simple for you which rule to take. So you just have to understand this table and you're sorted. You understand this table and then I don't have to teach you anything more. Okay, so first thing I have to see the supply. When was the supply given? All I have to see is when was the supply given. So if the supply is before the change in rate, supply is before change in rate. So first I have to find that yes, if it is before the change in rate, then we have rules which are in category A. If it falls here, then it will be category A. Okay. If it is falling in the second category, then it will be in B. Category B. Category B is when the supply has been given after the change in rate. So here this is category A because supply is given before change in rate. If supply was given here, if I say supply is here after the change in rate, then it is category B. Don't worry, pay attention to the entire thing, you will understand. Now first category, when it is before, and let's say invoice is also after, payment is also after, then we will say the time of supply is earlier of invoice or payment. Earlier of invoice or payment, whichever is earlier. Now whichever rate we take, it is after the change in rate, the new rate will apply. New rate will apply because time of supply is, this is after the change in rate. So earlier of them will be the time of supply. Time is fine, but the rate we will get is the new rate. So this is the example which is there made for you. So to explain with the help of an example, now you will understand. What happened is the supply was given before the change in rate. Supply was given before the change in rate. That time the rate was 12%. Now after the change in rate, the invoice and payment was received. And this time it was 18%. So what they are saying, listen, if this is in category A, because supply was given before the change in rate, then we will take the time of supply as early of these two. Let's say this is the earlier of these two. So date of invoice will be the time of supply, and that time obviously the rate will be the new rate that is there. Done. The next, if it is before, supply is before the change in rate and invoice is also before. So if anything comes before, then we will take that only, date of invoice. If this is supplied before and repayment before, then we'll take date of payment. So if you are seeing even one factor coming before, then we'll take that earlier thing only and the old rate will apply. Old rate will apply. Why, sir? Because date of invoice was also before. So if it was before, then old rate was there when this invoice date was there. Same here, after, before, so before we will take into consideration. Clear? And the old rate will apply. Now, understand for the other thing. So if you understand one, you will understand the other one also very simple. Now pay attention. If this is the time, if I'm making, this is the change in rate. Change in rate happened here. Supply is after the change in rate. This is after, this is before. Now supply is after the change in rate. So anything now coming here, okay, if anything coming after now, that will be the rate. So if this is after, then anything coming after, we'll take that only. So this is the date of payment and this is the date of invoice. So anything coming after, we will take that. And if both are there, if both are earlier, date of invoice is here and date of payment is here, so we take whichever is earlier, but the old rate will apply. Understood till here? Yes or no? So if I have to explain, very simple, this is the entire table. So in this, I will just see what is this. I made the entire table. Now you will understand perfectly. Okay. Part A is supply is done before the change in rate. This is the before the change in rate. Supply is done before the change in rate. Okay. So this is the part A where time of supply is here. The change in rate happened here. Goods are supplied before the change in rate. So here these rules will apply category A. So only 3 points are there. If invoice is before and payment is after, so we will take date of invoice and the old rate will apply. If payment is before and invoice is after, so whichever is before we will take, payment is before, we take the days and the old rate will apply. If both are before, then we'll say whichever is earlier, but the new rate will apply. The new rate will apply. What is happening is completion is before. Completion is before and date of invoice and date of payment is happening at a different date. So since this is before the change in rate, anything comes before. So if this is before and this is before, so we take date of invoice. If this is before, then we take date of payment and we apply the old rate. But if both are after, then we take whichever is earlier, but the new rate will apply. Concept clear? Now the second category, similar thing I'm explaining again. Part B, if this is the change in rate, rate has changed here and supply was given after the change in rate. Supply was given after the change in rate. Then any one which comes here, so if let's say date of invoice came here, so we'll say date of invoice will be covered and the the new rate will apply, because here is the new rate. Okay, same points. So here we will see anything coming after will be taken, new rate will be done. Anything coming after, invoice has been issued and payment is received before, so in date of invoice will both are issued before, so then we'll say whichever is earlier and the old rate will apply. Your invoice is after and payment is before, so whichever is, we'll take the new rate because one after is coming. Is it easy or it is confusing? Do you want me to simplify it or it is confusing? Easy. Okay, easy or confusing? Quickly I want you to put in the chat box so then I can quickly explain. Should I move ahead and explain directly the sum, or it is you've understood? Should I simplify or you have understood? I need you to put in the chat box. Understood or you want me to simplify? Okay, so I'll simplify it once and for all. Take a book and pen, write it down, you will understand. So if, okay, great, now pay attention. Change in rate. Now I'm showing you the provision for change in rate. Change in rate, we are seeing three events. Wait. Now, how do I? Okay, now pay attention to the rule. Okay, so there are normally three events that we are going to see. One is date of completion when you have given the service, date of invoice, and the other one is date of payment. Clear? These three things have been given. Date of supply, date of invoice and date of payment. On basis of these three things, we are going to determine the old rate will apply or the new rate will apply. So first, the part A talks when supply is before change in rate, supply is before change in rate, and the invoice is before, and the, so we did supply is before the change in rate, invoice is before, and the payment is after. So what is the time of supply? Quickly. So I told you, since if supply is before, then anything that comes before that you will pick up. So it will be the date of invoice. So you will take date of invoice. And before, so it is before the change in rate, so that is the time of supply. So when it is before, that means the old rate will apply. Rate applicable is old rate. Now other thing, if the invoice is after but the payment is before, so I told you, if we start with supply before, then anything that comes before we will take that into consideration and we will say, listen, the time of supply is the date of payment. Now since date of payment is also before, so the old rate will apply. Clear till here? And whenever both are after, see, both are before, the won't apply only because everything is before the change in rate. So the old rate will only apply, but it will only happen when one is here, one is there, then. So if both are after, let's say this is also after, payment is also after, then we say whichever is earlier, and obviously both are after, so after the change in rate, so that time the new rate will only apply. Clear? The second case is supply is when after. Now I want all of you all to understand and finish. When the supply is after change in rate, supply is after change in rate. Supply has happened after the change in rate. Okay. So now supply is after. So anything that comes after will be selected as the time of supply. So two dates are left. Okay. We see date of supply, we see date of payment, and we see date of invoice. So first I'm saying that the invoice is before and payment is after. So whichever is after I will pick up. So the time of supply will be payment and the new rate will apply. New rate will be taken. Why? Because with date of payment we are seeing this is our supply is after, so anything that comes after will be picked up, and after the change in rate, that means the new rate will apply. Same if payment is before and let's say the invoice is after but the payment is before. So since the supply is after, whichever is after we'll pick it up and we'll say that date of invoice is there and the new rate will apply. If supply is after and both of them are earlier, then we'll say whichever is earlier and we'll apply the old rate. Whichever both are before, then we take whichever is earlier and we apply the old rate. Now this is the rule. If you've written, it's fine. Now we'll solve a sum, so it will be easy for you to understand. Okay. Now you'll solve a sum, you'll find it easy to apply. First, time of supply in case of change in rate, the rate change has increased from 12% with effect from 2017. Before it was 5%. So before 2017, it was 5%. On 110, this happened a change in rate, and after that it was 12%. So now I don't know which rate to take, 5 or 12. So we'll apply the rules and finish it off. So first I'll say date of supply is given, date of invoice, date of payment, value of service. So first category, this is the change in rate. So is the supply given before the change in rate? So 1, 2, 3. So these are all before the change in rate. So before the change in rate, the part A applies. Part 1, remember I told you, part 1 will apply. That this is before change in rate, before change in rate. So anything that is before, now anything that is before will be taken. So 110, this is after the change in rate. This is also after the change in rate, right? So 110 is the change in rate. Now both are after. So this is also after, this is also after. So then obviously the new rate will apply here. So whichever is earlier, we will take, that's 510, and the new rate will apply. Now we go to see new rate means what? You will have to multiply it with 12%. If I see here, this is 12.9 and this is 8.10. So in this, what we will see that this supply is before the change in rate. This is also before the change in rate, and this is after. So whichever is before will be taken, that is, this will be taken as the time of supply, and the old rate will apply. So we'll multiply it by 5%. Third category is again, this is before change in rate, this is given after, and this is given before. So whichever is before, we will take that and we'll take the old rate. Clear till here? Yes or no? Similarly, you will do for the balance part also. Okay, that is it. We've completed the change in rate provisions also. Now we are doing the value of supply. Now we'll be doing your value of supply. Very, very simple, very, very easy. Okay. So now section 15 talks about the value of supply. We've understood that in GST you come to know the rate, like 10%, 12% is the rate. This rate is applied on the value of goods. So now what is the value? So section 15 subsection 1 says this value is a transaction value. That means GST is always applied on how much worth of transaction you've done. So that is GST will be applied on the value. That value will be the transaction value. So whatever the buyer is paying is the transaction value. We will see what all is to be included in the value. We will see what all is to be excluded from the value. 5 subsection 4 talks about the rules, and then they say that central government can determine something. So 1, 2, 3 is important. 4 we have separate rules for it. So what is section 15 subsection 1? I will tell you. But let me explain you what do you mean by value of supply. For example, if I tell 18% is there, 18% GST rate is there. I bought a laptop for 1 lakh. GST will be how much? If I bought a laptop for 1 lakh, I'm telling you the GST rate is 18%. What will be the GST payable amount? So you will say obviously 1 lakh into 18%. Yeah. So what did you do? You hit on this, right? So this was the value that you took. The value. So rate is always applied on the value of the goods. So value is actually the transaction value on 1 lakh. If the laptop would be of 2 lakhs, we'll apply the rate on 2 lakhs. Now transaction value means when the receipt both are unrelated party and price is the sole consideration. So if there is a related party, obviously that is not going to be taken into consideration because it will affect the relation will affect the price. So transaction value we will take when both are unrelated and price is the sole consideration or the only thing that we are getting. Now subsection 2 talks about trips. It talks about trip. Now what is trips? All this is to be included in the value. All taxes other than GST. For example, other than GST also there are multiple taxes. There could be a green tax if it is there. There could be entertainment tax, other kind of taxes that the government might levy which is other than GST. So all that will be included. Any amount which the recipient is paying is to be added because all we know that the transaction value is whatever the recipient has to pay. So if the recipient has incurred any money, that also will be added. Any side expenses like transportation, insurance, incidental to the goods will also be covered. Penalty. So if we've levied a penalty, even the penalty amount we are getting. So it is a recipient is paying because transaction value means anything that the recipient has to pay. So even penalty also he has to pay. This will also be added, and private subsidies will be added. When I say private subsidies means a private company or a public company is giving me money. So that is to be added in the value. For example, if I am giving calculators of worth 100 at 80 to the children because a NGO is giving me 20 rupees. A private NGO is giving 20 rupees subsidy to me. That per calculator 20 rupees we will give. So I am ultimately charging 80 rupees only from the buyer. I want education to be promoted. What will be the value of goods? 100. Why? Because 80 and private subsidies are to be added. Only government subsidies are excluded. For example, when the government gives some CNG for your your cylinders, gas cylinders. So government actually pays some amount. So that can be excluded. Private subsidies are to be included. Sir, what is the full form of TRIPS? Taxes other than GST are to be added. Anything that the recipient is paying is to be added. Any incidental has to be added. P, any penalty has to be added. And S is subsidies. Private subsidies are to be added. Very, very simple. So then what is to be excluded? Discounts are to be excluded. So when we see exclusions are discounts are to be excluded. So what do you mean by that? So for very simple, if there is a pre-sale discount at the time of buying only, I get a Diwali offer, I make a bargain and I get, so I will always pay on the net figure. Discount is to be excluded from supply. For example, this is like an invoice, how it would be if discount is there. So whenever you bought a mobile phone or something, they give you the value of goods, then they less the discount. So discounts are always to be excluded, and then you will have the transaction value on which GST rate is applied. Concept clear? Very simple, and that is it. I have covered, and then the rules are there which we will see now in some time as well. Okay, now we will see the GST rules also. Okay, GST rules will be seen now. Now we will see the GST rules as well. Okay, so very simple. If the particular or GST rules will just start in some time, we'll take a 5-10 minute break. Okay, 5 minutes break, and then we will start with the GST rules also, and we will complete it. Okay, so 5-10 minutes, and we will start with this, and then we will start with ITC. ITC is also important. Even what I have done, 110% exam questions will come from what I am doing. Okay, and like these questions will only come. Even I'll be doing the valuation rules now in some time. We'll take a 5-minute breather and we will come back. Okay. Okay, so you all can hear me, right? So we start with the next point with the valuation rules. Okay. Hi. So we'll be starting with the valuation rules, the extreme summary, but that is actually covers the entire provisions. First is rule number 27. Let's understand first when do we require to follow the valuation rules. So only when section 15 cannot be applied, okay? When maybe section 15 subsection 1 says that the transaction value should be taken when it is among the unrelated persons and price is the sole consideration, okay? However, if there is, this is not followed or this is not in the case, I am dealing with a related party or where don't have price is not the sole consideration, that is I'm not getting only price, I'm getting money or money's worth, then what is to be done? Then you have to follow the rules. Now one very simple, the first rule. So when rule number 27 says that if I am getting money and money's worth, if we are getting money and money's worth, then what is to be done? The best example is when you go to buy a mobile phone. When you buy a mobile phone, you give your old phone also. So in that case, price is not the money, is not the sole consideration. You're giving money and money's worth. So then what is to be done? So the very first thing is we won't sit to find the valuation of that old phone. We'll first step is to take the OMV, open market value. Market price is available, that will be the price of the goods. When open market value is not there, then we will have to sit and find how much money you have given and how much money's worth you have given. So then you add. If money's worth cannot be found out, then you will have to look at similar goods. Okay, and if similar goods are not there, then you will have to go as per cost method. Cost method is very simple, where they say 110% of cost price will be the value of goods. So first I go for open market value, the market price of the goods, and I say this is it, this is what we will count. So for example, if I go to buy a phone, iPhone of 80,000, okay, I give 50,000 cash and I give a old phone, okay. Now we don't have to do valuation of old phone, we take the open market value. That's the first rule. When OMV is not available, then we'll have to find the value of the old phone. But if value of old phone cannot be found out, then we go for similar goods. If similar goods also nothing is found, then we'll say whatever is the cost of the goods plus 10% is the value of the goods. So 10% we take it as a profit margin. And if nothing happens, then the rule number 31 says a residuary rule will apply. What is residuary rule? Is the best judgment officer will decide how he wants to go. The next is rule number 28, when you're dealing with related persons or distinct persons. Okay, except agents. For agent we have separate. So if I'm dealing with my sister or I'm dealing with my brother, etc. Very simple, she's come, she's taken at lesser price, we don't know what to do. Simple rule, OMV, take the open market value. I think in your exam they will just ask open market value. If that is not there, okay, then you will have to go to similar goods. Then if that is not there, then we go as per cost method. Cost method is 110% of cost will be deemed to be the value. For example, if 100 rupees is the cost, value will be 110. 10 rupees will be assumed deemed profit margin, and 110 we will take into consideration. Residuary, if none of the rules apply, then the best judgment will be taken. The officer will use it. There's one thing that, listen, if you don't want to follow any of this, then the person has an option to take 90% of the resale price of the price charged by the recipient. Sir, what do you mean by this? See, the dealer has an option when he's selling to a related party. He has an option either to take the OMB. If OMB is not available, then the similar goods. If not similar, then the cost method in hierarchy. Or he can set aside, he can say, I don't want all of this. I will use 90% of the resale price by the recipient is deemed to be my value. For example, if I am here, I am the supplier, I have given it to my recipient. Okay, the recipient is a related party. Whatever price the recipient will sell to the customers or will further sell it to the customer, that much 90% will be deemed to be the value. For example, if the related party has sold it to the customer for 1 lakh, automatically 90% will be for this transaction. When I have sold to related party, 90,000 will be deemed to be the value. So how do you word it, sir? You will say he has an option to take 90% of the resale price charged by the recipient. Sir, it is so simple. Yes, it is simple, but what if it is sold through agent? Agent, it is even more simple, even it is everything same. Means OMB will always be the case because that is the most best thing, take the market price of the goods. If that is not possible, then cost method. If that is not possible, residuary. He also has an option to take resale price of the recipient. That means I have sold to agent. Agent, whatever price he sells, I can say 90% of that is my value of the goods. Okay. So let's say the agent sold at 1 lakh. So a sale from me to the agent will be valued at 90% of what the agent is selling to the customer. I have explained to you. Very, very simple. Sir, what do you mean by cost method? Cost method is when none of this is applying, we apply rule number 30 and 31. 30 is take the 110% of the cost of the goods is considered to be the value of the goods. Cost of production, acquisition, service, anything. Sir, what is residuary rule? Rule number 31. Always they say that if nothing can apply, then the officer will apply his best judgment and complete it. Okay, sir, this is so simple. Yes, it is simple. Didn't make sense to leave it. Okay, but now we come to another massive rule, which is your rule number 32. Okay, that is a important rule also. Sir, do we have to know it? Answer is not really, but at least an overview have to know, because in the last exam they have asked it. Okay, because in the last exam they have asked it, so it is important for you to know. Okay, so let's see what is the valuation rule, especially rule number 30. So this is all we have done till now. I have beautifully explained rule number 27 to 31. Now we are seeing rule number 30, this 31A also we will see, and so on. Okay, what is 31A? Let's see. All this I have explained, summary is already done. Now we have to do 31A. 31A, I'll tell you just in short, it's lottery, and it is a confirmed exam question. They ask in the exam. All these rules are there, I have explained in short to you. Now I'm going to take you through rule number 31A. This. Okay, market is important. So rule number 31A, value in case of lottery, betting, gambling and horse racing. For lottery we have subsection 1, and for the balance we have subsection 2, and for everything else we have subsection 3. Okay, subsection 3 is for the balance, horsing and everything. Okay, so first thing is state of Kerala. Now even if you go to see some states, they are selling lotteries. The state is only playing lotteries. For example, Goa government launches lotteries, they sell it to these distributors, etc. Even if you go to see Kerala government, they have their state run lotteries. So I'm planning to come to Kerala also to meet the students. Okay, very soon. Right now I'll be going to Tamil Nadu. In Tamil Nadu, specifically Chennai, lottery is banned. It is banned to take any lottery. There is no lottery business in Tamil Nadu. Now, what is the rule here? So I will show you the rule. They say that nothing contained in this chapter shall apply. Means nothing, whatever, notwithstanding anything contained in the entire valuation part, the valuation of lottery will be done below. So it doesn't matter what has been given in section 15 or any of this. For valuation of lottery, this will be the case. Now, if I will show you, and this is an exam question, I'm not, no, this is very, very important exam question. Now, in case of lottery, the value of the lottery shall be deemed to be 100 divided by 128 of the face value or the price notified by the organizing state, whichever is higher. Sir, it sounds very confusing, but it is so simple, so simple. If I explain to you, what happens is these state governments, I'll explain. See, normally the supplier of this lottery, who launches this lottery? The government. They sell these lottery to these lottery distributors and to these people, okay? People, they give it. Now, when the government does, it is inclusive of GST amount. When they sell the lottery, for example, 1000, it is inclusive of 188 or 28% GST. So that is why, if I ask you if this 1000 is inclusive of 28%, can you find out the value of the goods? Can you find the value of the lottery? So how will you do? Okay, it is inclusive of the value of the lottery. So how will you do? It's very, very simple. You will say 100 with GST becomes 128, right? This is inclusive of GST. 1000 is also inclusive of GST. So it will come here. So now we will do cross multiply to know the value. This is value. When we add it up, you get inclusive of GST. So then we do whatever is the price of lottery, the face value of lottery, right? Or if the government has given a higher figure, then we have to take the higher figure. If 1000 rupees we have charged, but if government has notified that the value will be 1200, then you have to take 1200. So face value into 100 divided by 128. So if you see, this is the formula given. So it's nothing but to find the value, because the sale, whatever is this, it is always inclusive of GST amount. So now have you understood? It is deemed, so this is deemed to be the value, okay, because it always includes the GST figure, okay. Now coming to the subsection 3, which talks about betting, gambling and horse racing. Now very, very simple. Only when the state is selling the lottery, they include the GST amount. For all others, it's a normal thing. So here also it's very simple, that value in case of betting, horsing, so this is done by certain totalizers. We call them as totalizers, or we call them as wherever, you could have race club, all of them they are having. It's not really government. So when they are there, let's say the bet 365 is the biggest gaming company. Now these are all companies, etc. These are not government, so they don't include the GST amount. So whatever this they charge from the recipient will be the value of goods. This will be the value of goods, on this the GST. So in case of betting, gambling and horse racing, it's very simple. The amount charged from the recipient is actually the value of the goods. So we can also say the 100% of the amount charged from the recipient is the value of the goods. So for betting, gambling, it's so simple. It doesn't include the GST amount, because only in state run lotteries, that is the calculation. Shall be 100% of the face value of the bet or the amount paid to the totalizer. So how much ever we pay to the totalizer, the one who arranges this betting, gambling services, and that is it, we are done. Now we go to the next rule, is for currencies. Now currency is also very, very simple. Okay, now what is there for currency? That in currency, the currency dealers, they have two options. One is rule 32(2)A and 32(2)B. They have asked this in the last exam. Concept is very simple. Just remember 1%. That's it. Nothing much you need to remember. I'll tell you. A currency dealer has two options, whether he wants to go under option 1 or he wants to go under option 2. Now if he decides to go under option 1, okay, then for option 1, when rupees are involved, they say RBI reference rate is available or it is not available. Or when it is not involved, only the foreign currencies are involved, then the calculation is different. See, if dollar we are making from rupees to dollar, so rupees is involved, okay, and RBI reference rate is available or it is not available, we'll see what will be, but rupee is involved, so rupee to pound, rupee to euro, etc. And when rupee is not involved at all, so that means dollar is being converted into euro, yen, etc. So it's between all foreign currencies only. So don't worry, I'm just explaining you. Let's see what is the main provision. So the option 1 is supremely simple. Okay, I want you to note it down. It is so simple that you will laugh. Okay, it's so simple that you will laugh. Okay, that the value in case of foreign currency will be the difference between whatever rate is being done, buying or selling rate, and the RBI reference rate. So if whatever is the buying and selling rate that you are doing and you compare it with the RBI reference rate, the difference is the value of supply. So whatever you are buying, selling, whatever is there, you will keep that. Then you will see the RBI reference rate in the same transaction. You will come to know the difference is the value of the goods. For one currency you will get, if you 3 currencies are being converted, then that many times you will multiply. Sir, give example. So let's take an example, you will understand. And if RBI reference rate is not given, so normally RBI gives you a reference rate. So with that reference rate becomes like the price base. You compare it with what the dealer is doing, difference is the value. So value, if RBI reference rate is not given, will be 1% of the gross Indian rupees provided for exchanging the amount. So for example, if the amount to be converted is rupees 65,000, amount to be converted is 65,000. Rate as per USD is 65. And I told you, whatever is the rate of the dealer, you have to compare it with the RBI rate. You subtract it. 2 rupees into how many ever being converted. Okay, into the total number of currencies that are being converted. So this is per dollar. So we'll come to know 1000 will be converted. Okay, so it will be rupees 63. So it will come 2 rupees per dollar. It will come 2 rupees per dollar. How much we are converting? This is in rupees. This is the amount. So $1000 are being exchanged. So into 2 will be the actual value of the goods. So what have they given? That the difference you will have to take into the total number of currencies. So I will see the difference between these two. I will come to know is 2 into how much foreign currency is being converted. So it is 65 per dollar. So that means 1000 such 65,000 is going to be converted. So 1000 rupees we will keep it. So 2000 is the value. Same way here, 65,000, this is not available. Then we just take 1% of the gross Indian rupees. We'll take that into consideration, right? So again, if we see 65,000 is there, so on that 2000 rupees will be the value, and here it will be 65 rupees. So what does option 1 say? That when rupees are involved, if a foreign currency from Indian rupees is converted to Indian rupees, then the equal to the difference in the buying or the selling rate and the RBI reference rate for that currency at that time multiplied by the total units of the currency. Next one, this you try and let me know whether you understand or not. Sorry. Okay, so let's take this example, the next one. Now you will understand. Okay, so they will give you a question like this, that $1000 are to be converted into 64,000. at this much rate, you compare it with the RBI reference rate, you will come to know that 64 minus 63 is 1 into the total number of currencies that are being converted into 1000. You will come to know your answer is 1000. Okay, rupees will be there. And if the reference rate is not there, okay, if RBI reference rate is not there, so we'll simply take 1% of the rupee terms. Then comes if foreign currency is involved. If foreign currency is involved, okay, then you will take 1%. You will take 1% of the lesser of the two foreign currencies when converted into Indian rupees. So they can ask you in the exam. So earlier one was what? You just take a subtraction, division between, you just subtract the difference between the RBI reference rate and the dealer's exchange rate into the total number of foreign currencies that are being converted. That's it. You'll get in rupee term, that is the value. Here, what is the value of supply? When both are foreign currencies, no rupee is being involved. So very simple, I will convert both of the foreign currencies. For example, if a person is planning to exchange 100 euros into $120, at the time the exchange rate was for 1 euro it was 77 rupees and for dollar it was 65 rupees. So then what we have to do is the value in euro is, when we convert it, we'll come to know is 77,000, and rupee will be rupees when converted into dollars, when converted into rupees will be 7,800. Okay, so we'll multiply these two. So 100 euros into rupees. So what was the rupee terms? 70. This was for euro, so 77. Okay, so you'll come to know it's 7,700. Now when we see here value of dollar in rupee terms, so when you see this was getting converted into $120. At that time $1 was 65 rupees. So when you multiply, okay, 65 into 120, so you get 7,800. So what you have to do, just convert the foreign currencies into rupee terms. Both you see, then they say whichever is lower. Whichever is lower, so this is lower, 1% of this is deemed to be the value of the goods. So 1% of this will be deemed to be the value. So both the foreign currencies I will convert into Indian rupees, and we will see whichever is less, 1% will be there. The second option that he has, if he doesn't want to go as per category 1, which we saw, how do you convert when rupees involved, difference and into the total number of currencies that is there. Or what we do is, we take, if both are foreign currencies, then we convert both into rupee terms. We will see whichever is coming less and we take 1% of that, that is the value. Now when we see for the other option which the dealer gets, okay, the other option is very simple. Again, gross amount up to 1 lakh. So this works like the income tax slab rates. Income tax slab rates, he'll take 1% subject to minimum of 250. So 1% of 1 lakh is 1,000. Okay, so this is there. If you're going above 1 lakh, so how, as we have the income tax slab rate, on every slab rate that will be there, fill the first slab, this will be the rate, on the higher thing the other rate will be there. Same applies here. If it is exceeding 1 lakh up to 10 lakhs, then 1,000 of the earlier one will be there only on the 1 lakh, and 0.5% of the gross amount charge. So half, we've done the percentage, 0.5. If it is exceeding 10 lakhs also, then if you add these two, you'll come to know it's 5,500 plus 0.10% of the amount exceeding 10 lakhs subject to a maximum of 60,000. Now this is very unlikely that they ask, but let's see how. I'll give you an example and it'll be done. So let's say if we are converting 6,500, only are converting only 6,500. So what they have said, subject to a minimum of 1% of this is 65 rupees or 250, whichever is higher. So we get 250. Now if it is 65,000 that we want to convert, so then again 1%, 65,000 is also in the first slab only. So simply 1%, so you'll get 650. So that is done. If it is 6,50,000, if it is 6,50,000, then what will you do? Same thing for the up to 1 lakh. Up to 1 lakh, we had to take 1%, so it will come 1,000. Now amount beyond 1 lakh, that is your in year, it is 6,50,000. So 1 lakh is already done, 1,000 rupees, and on the 5 lakhs, 0.5% will be taken. Okay, on 5,50,000, the 0.5 will be taken. You will get this amount. Clear? So just the understanding is more than enough. It's unlikely that they will ask you. So you can take this as a summary, that if RBI reference rate is available, difference between the RBI rate into the total number of currency. If RBI exchange rate is not there, then you will take 1% of the gross total income. I think this they can ask you in the exam. That is it. Okay, last time also they had asked this amount, and this, if you want, you can take a screenshot for the higher, how it is done higher way. Okay, but not important. Then there is something which I want to take you through. Okay, which is for pure agent. Okay, now coming to the concept of pure agent. Now very, very important. I'll be done with the valuation, then I'll go to directly the other part, that is your valuation after this, ITC. Now what is a pure agent? Very, very simple. A pure agent is an agent who is not taking any consideration. He won't take even 1 rupee. Pure agent doesn't even take 1 rupee. What does he do? Whatever money he gets, he will use it. So only expenditure is incurring. For example, when we have company secretaries, okay, like CS, company secretary. So what happens is, we are here, supplier is a company secretary. For example, I am there, I am giving a particular this person incorporation services. I am providing him incorporation services. I charge him for my professional charges 30,000 rupees, and I tell him, listen, for the RBI, for the MCA portal charges, for the registration charges, for the stamp duty, you pay me exact that much amount only. So 5,000 rupees will be paid, okay, as a pure agent. Like 5,000 you give me the cost to cost basis. So therefore what we should take as the value of supply? What we should take as value of supply? 30 or 35? Now the answer is very simple. Here I have only 30,000 I am getting. So this should be the value of supply. This I am acting as a pure agent. Pure means I am not taking any profit from here. Only expenditure is being taken and it is being given. So this pure agent is not added in the value. So the answer is you will take only 30,000 in the value. So have you understood the concept of pure agent? Pure agent is a person who in addition to the services that I am providing, I have taken some charges. Let's see where it is given. A pure agent receives only the actual amount of the expenditure. He uses only the actual amount which is there. Does not use it for his own purpose. Okay, he doesn't keep any profit. Doesn't have any rights also in it. And we have an agreement just to incur the expenditures. So out of pocket expenditures will not be added in my professional value or my services. Okay, which is I'm doing as a this. So is the concept of pure agent clear? Pure agent is a person who takes the expenditure and does the expenditure, does not charge anything profit on it. So that is not included in the value of supply. Now we will be starting with the next thing, which is your ITC. Okay, input tax credit and the sums on ITC. Till here I have covered every single thing. You don't have to worry, even you've understood little bit also, but if you have understood the basics, you're good to go. I'm covering every single thing because I don't want even one thing to come outside from what I'm teaching you. Okay, I'll be doing everything. Now I'll be starting with the ITC provisions. Hi, so let's begin with the ITC provision, input tax credit. Now what do you mean by ITC? Now if I'm manufacturing this car, okay, I'm planning to manufacture and sell Tesla cars. To manufacture, I would have to incur cost first to make the goods. Yes or no? I must have paid taxes. I must have had raw materials, that's called as my inputs. The tire, the steel, the leather, the all of that will be there. I would also take a lot of services to make this car. So this would be services of engineers, of lawyers, of marketers, etc. Okay, of painting services, etc. So many services I would take just to manufacture the car. And when I'm taking the services, I also have to pay GST. And third, to make the car, I must have also imported some machinery, okay, from for which I also had to pay GST, custom duty, etc. So what is this? I am also paying for the machines. Now imagine all this, I am just incurring expenses and paying GST. So tell me one thing, should I be sad or I should be happy? I'll say it's okay, I'm making all these expenses, I will take a credit of all of this. This thing is called as input tax credit. What do you mean by input tax credit? In simple word, taking a credit. Now sir, how do I say credit? Taking a set off for tax paid earlier. Tax paid earlier. Set off for tax paid earlier is called as input tax credit. So when I sell, I will also collect GST. I will take a set off of all the taxes I have paid earlier, and only the balance amount I will pay back to the government. Very, very simple, very, very easy. Now, tax, when we see that input tax, when I say input tax, it can be taken of three things. Credit of all the past taxes can be taken of inputs, capital goods and input service. Clear? So what do you mean by inputs? Inputs means any goods other than capital goods, because capital goods are covered separately, and service means any service that I am done in furtherance of a business, etc. Very, very simple sections you can see. Now imagine all my input tax credit, I tell you, is 3 lakh rupees. Is 3 lakh rupees. All my input tax, input service, capital goods, I add it up, it comes up to 3 lakhs. When I sell the car, I must have collected 5 lakh rupees. So the difference is 2 lakhs. This is only payable. This is only payable because I am allowed to take a set off. I can tell the government, listen, I have collected 5, but I have already paid you 3. So I will take a set off. I will just keep this in my pocket. I'll say, sorry, I have already paid this earlier to you. So I will just pay you the balance amount. So only GST payable will only be 2 lakh rupees to the government. In total, the government gets 5 lakhs. 3 lakhs earlier and 2 lakhs now. Very simple. Now, if you go to see that for a dealer, getting this credit is very important. Getting this credit is extremely important because it's a monetary loss if he doesn't get this credit. Okay. So let's see what the provisions are there. Input tax credit. Section 16. Section 16 talks that only registered person can claim ITC. Can take ITC. So one MCQ that they can ask you is that XYZ person is not registered. Can he claim ITC? if he is not registered, answer is if he is not registered, he cannot claim ITC. Very simple, that's the base rule. Subsection 2 talks about the conditions to be satisfied to claim ITC. If you want to take ITC, what conditions you have to satisfy. So every dealer will be reading this provision extremely properly. Why? Because I have to fulfill these conditions to get the credit. So first thing is I should be in possession of the tax invoice. So they will tell you that the dealer doesn't have this invoice. So he'll say no credit available. Credit will only be available if he has the purchase invoices. He can produce the purchase invoices. Second, they have added this that even if it is there, I have purchased from, let's say, Mr. Santosh. Santosh is a supplier. I have purchased from him. I have paid him the GST. So I would be like, see, I have a purchase invoice. I should get. But they say no. Till Mr. Santosh is not putting in his records that he has supplied to you and he has received so much GST, we will not give you credit. So then I will call Mr. Santosh and I will tell Santosh, better fill your returns and say that you supplied to me because my credit will be blocked. Government has done this. Why? Self-policing system, because the dealer is telling the other dealer to comply. So it's a good thing. So details of the invoice or debit note have been furnished by the supplier, only then the credit will be given. So the supplier has to put it in GSTR1 in his supply that he has supplied to me for me to claim the credit. I should have received the goods or services or both. I should have actually received the goods or services. So if the goods have not been received, credit cannot be taken. Payment done, everything done, doesn't matter. Where are the goods? Goods should come. 4 conditions are there, you have to remember that properly. Details of the ITC are not blocked under section 38. Now you don't have to worry. Section 38 tells you that in certain cases ITC cannot be claimed or is restricted. BA says that in certain cases it could be restricted. So if it is restricted, you will not get. So I have to ensure that condition. Tax, now this is interesting and important. Tax should have actually be paid to the government and the return should have been filed. So return to be filed is understood. This point I will explain you in detail. Now what are the conditions given under section 16? Registered person, he should be a registered person. This is subsection 1. Subsection 2, they are saying that what is the thing? A purchase invoice should be there. No invoice, no credit. Show me where is the invoice. Invoice is there and those seller should put the details and all that. That is easy. Then you should have received the goods and services. Receive goods and services. Then the third. So this is A. This is really B. This is C. C is tax should have been paid to government. And D is returns should have been filed on time in section 39. That is simple. This part I will explain. Now you understand this, what I'm going to say. Tax has been paid to the government. So for example, if I am the supplier, I am the recipient. I am we are studying ITC. So I'm trying to claim ITC. I want to take a credit. So I have made the payment plus GST. I made the payment to the supplier. Supplier has given me goods or service, whatever it is. Okay, he has given me the goods and services. All the conditions are there. He has given. But what is happening is the supplier with GST he has got, he is not depositing it with the government. He has to give it now. He is collected from me, then he has to give it to the government. So government is saying, listen, till this guy doesn't give me the GST, I am not allowing you credit. So till he gives or deposits the GST to government, till then you can't claim the credit, which is absolutely logical. Government will say, in my pocket I didn't get, why I'll give you credit? Tell your supplier that what GST you paid to pay to me. If he doesn't pay, sorry, I won't give you. You all fight among yourselves. You all file case on yourself. I will not give you GST. Very simple. That government is also being very smart. Okay, all this we've covered. Okay, then ITC, again, a very favorite question of the examiner. Favorite question, okay, is that ITC on custom on goods in lots. For example, if I have entered into a contract to provide me 10,000 units, and 2,000 has come, 2,000 has come in 1 month, another 2,000 has come in another month. So they say, listen, ITC on all the goods will be available only on receipt of the last order. This is marked as super important. Marked as super important. Okay. Only on the last order you will get credit of entire 1,000. It is not that for every 2,000 you will get the credit. 2,000 received, you won't get. Other 2,000 received, you won't get. Only when all the lots are received, then you can claim the credit. It is no partial credit is not allowed. So ITC on goods received in lots. So let's take a very simple exam question. Now ITC received in lots. So they have said that he's ordered certain lots, and first lot came here, second lot came here, third lot came here, fourth lot came. He wants proportionate basis. That for the first lot, let me take on 19th. For second lot, let me take me. So he said no. Law says very clear that credit of this shall be taken only after the receipt of the last lot. Very simple exam MCQ they ask you. Okay. Then comes to one very simple little thing, that double benefit cannot be taken. Two benefits cannot be taken. Meaning, either you take the benefit of depreciation or you take the benefit of ITC. Two. So imagine if this is the machinery. Okay, machinery. This is a very important rule. Apart from exam also, just remember. If it is a machinery and the cost of the machine is 1 lakh rupees and 18,000 GST. Okay. So 1 lakh 18,000 is the total cost including tax. Now if this entire cost in my balance sheet, I'll put it in the asset side. I put assets, I will put machinery, right? If I put 1 lakh 18,000, now imagine what is happening. I'm putting 1 lakh 18,000 and I'm claiming depreciation benefit, depreciation on this figure including the GST amount. Including the GST amount. So I will get the benefit, yes or no? So what is happening? They call this as capitalization. So when you have capitalized your GST, means you've turned your GST into the capital and you're claiming the benefit of depreciation. So law will say, okay, fine, then you can't claim on this 18,000 again ITC. Choose whether you want depreciation on the ITC amount, on the GST amount, or you want to claim credit. Ideally, companies will prefer to take ITC, input tax credit, because input tax credit can be taken in one shot, whereas depreciation is 10% is only there. So what I have to do, I cannot capitalize the GST amount. This we are talking of only this figure. Should not be put in the balance sheet. In balance sheet, I should put 1 lakh. And depreciation should be charged. So you're not charging depreciation on this figure. Then in your profit and loss account, you can treat this as an expense and separately take a credit of it. Clear till here? So very simple rule. Very simple rule. Depreciation or ITC. Choose one of the benefits. Both cannot be claimed. In the sum, sometimes they ask that credit has been this has been put capitalized, so then no GST will be there. So if depreciation is charged on cost, ITC is available. If depreciation is on total cost, ITC is not available. It is only on the cost excluding GST. Then ITC will be available on the GST component. Very simple, very logical. No complex things. Okay. Now they come to this next time limit to avail. Okay. Now this time limit also data is earlier it was September. Now they have made October, November. So they have extended it. So earlier time limit to claim the ITC was, and this they will ask for sure in the exam. Okay, one question they will ask, what is the last date to avail the ITC, or when is the last day to upload the invoice? Very simple, 30th of November, 30th of November, or the last date or the actual date of filing the return, whichever is earlier. In simple words, so let's take this simple words. In simple words, time limit for ITC in respect of invoice is 30th November. I'll tell you how you'll remember. You will never forget this. In October is my birthday month. So you will remember November 30th or date and actual date of filing annual returns, whichever is earlier. So in October 23rd, you can wish me. You can note it down. Market is important. Okay. I like if you will wish me. Okay. So that is it. I've completed section 16. Now we go to section number 17. Okay. Section 17. So ITC is still sections 16 to 21. Then it is done. Okay. And remember, customs 10 mark questions will be there from section 90 to 100 question MCQ. From the 90th question till the 100 will be generally of customs. I have covered the full customs law. If you just YouTube it also now, Customs Act, CS Executive, my lecture will come. You watch it from there. I have also given you the notes. It will come from there only. There has been no amendment since then. Okay, I teach customs. You don't have to worry. Beautifully covered. Everything covered in I think 2 hours. You will get the full including the sums. So go ahead, do the customs provision from there. Don't miss it. Okay. Very, very important and very, very rapid we have covered. Now coming to section 17. Section 17 talks about apportionment and block credits. Apportionment means to divide. This to bifurcate. Apportionate means to bifurcate. It is given from a section 17 subsection 1 to 17 subsection 4. Clear? And block credits is the negative list. For this list, if you are following, ITC is not available. This is given in your section 17 subsection 5. Anything falling under section 17 subsection 5, ITC is not available. Concept clear? Yes sir. Apportionment is super simple. Okay, if I will tell you that I have bought certain goods and I'm going to use these goods for partly for business and partly for personal goods, personal service. ITC available, you will say ITC only available or that you're going to use for business. For personal use, ITC is not available. Similarly, if I ask you another stupid question that listen, I have bought certain goods and these goods I will use some for taxable and some for exempt goods. So can I claim for the exempt goods ITC? Answer is no. Credit can only be taken for taxable supplies. For example, I bought plastic and plastic is being used to packet exempt goods as well as taxable goods. So for taxable you require credit, right? Because you will require set off and all of that. Here your already output is exempt. So ITC is not available here. Very important rule that for exempt goods ITC is not available. Remember that. This is the bifurcation we are doing. It's so simple. Okay, if you're liking it, you're understanding it, please do go ahead and like the video and scream and tell your friends also that please watch this channel, subscribe to the channel, and even in your exam hall, if you get everything that I'm teaching, everything comes from whatever I'm teaching, then you go ahead, tell all your friends also about us. Okay. Now, coming to the banking part, section 1, and this is important, okay, it comes in the exam. What they have said is banking company. Banking company is engaged in giving taxable as well as exempt services. Normally, banking companies give taxable services like forex services. They give you, services of broking, multiple services they give. Nowadays, banking have entered into a lot of other kind of services also. They're giving you services which are taxable in nature. And they also give you services of keeping your money safe in your saving account. That is exempt. So a bank is normally, so very simple rule, let me tell you. Banks provide taxable as well as exempt supplies. Exempt. So then law is saying that, listen, as per the earlier rules when we've read, they have to maintain an account. For taxable they will be allowed, for non-taxable they will not be allowed, for exempt they will not be allowed. Now to find how much is taxable, how much is exempt, that proportionate credit allowed. That means if I tell you that 70% is for taxable, so we will do the proportionate if you want. But if a bank says I don't want to maintain such bifurcation, it's very difficult for me to maintain bifurcation, then we said okay fine, if you don't want to do this, sit and do this, technical distribution of how much is this. So take a ad hoc rate. Ad hoc rate, we will assume 50% is for business, 50% is for exempt. So 50% credit available. 50% credit available. We'll assume 50% of the total taxes you've paid earlier, 50% is for business, and therefore we are giving you the credit. That is it. It's that simple. Okay. What is it? 50% lay low, 50% let it go. So let go. We'll assume that everything is 50-50. So avail 50% of total credits available and let go, ignore the balance 50%. For example, if a bank has ITC available of 1 lakh, so that ITC they are using for taxable as well as non-taxable. So you sit and do the bifurcation, or you simply say 50% I am eligible, 50% I have to let go. So that is allowed. Banks generally prefer to go for 50-50. But if there is a supply, now pay attention to this, okay? This is very important. I'll show you what kind of sum will ask comes from here, okay? Supply between banks having the same PAN but different registrations. So if one bank is from one HDFC Bank Bombay to HDFC Bank Delhi, they are having a conversation. For them we are saying if it is a ITC is for one bank to another bank, same branch, one branch to another branch, the restriction of 50% will not apply. They can take full credit available. So if I tell you that one bank has one branch has spoken to other branch for these kind of transaction, full credit available. For other than that, 50% restriction is there. So when we have a bank in state A and bank in state B, they both will have the same. So HDFC Bank in Maharashtra and Gujarat will have the same PAN. For them, any supply made, any taxes paid here, 100% ITC available for such transaction. So they have given an example that a bank, I'm showing you what kind of example they can ask you. A bank has ITC of 1 lakh, okay, and also they got ITC from a branch of 50,000, of 10,000. What is total ITC available? What is total ITC available? So I'll say 50% of this, that is 50,000, plus 100% of this. So total available is 60k. How? 50% is ad hoc, let go, 50% take, and if it is from a branch, then 100% of that is allowed. So 60% will be 60,000 will be allowed. Very, very simple. Then we come to block credits. Okay. Then we come to block credits. One of their favorite questions also comes from here. I will tell you which all they ask. Okay. Section 17, subsection 5. Now from here, this table is a little important. You have to read it. I will show you what they ask in the exam. So ineligible credits or in the negative list, that means ITC is not available. In all these cases, you have to give a very sad little face because ITC is not available. If it falls in the exceptions, that means ITC is available. So you should be happy. ITC available. And here ITC is not available. So let's see the list given here. Very simple. Motor vehicles are not allowed. Okay, so let's say what used to happen is there is Parle-G biscuits. What they used to do, they are dealing in biscuits, but their directors used to buy the car in the name of the company. They used to buy these private jets, yachts, and they used to bill it to the company and take credit of it, saying that these are business assets. So we say, listen, unless you are dealing in this business, then only you get the credit. Otherwise, motor vehicle is not allowed. Okay, that is it. If it is not having more than 13 people. More than 13 people seems like a bus for employees allowed. So if it's a more than 13 seater, then including seats, including the driver. Okay, so they can ask you, market important there. So more than 13 seats ITC available. If up to 13 seater motor vehicle not allowed. Exceptions when it is allowed, I told you, if it is your business to supply further, or it is your business to transport passengers from one place to another. You're a cab, in the cab business like Ola, Uber, they will get imparting training of motor vehicles. For example, your good luck training schools, these aviation school, all of that they are covered because that's their business. Okay, motor vehicles for transportation of more than 13. So more than 13 are allowed. So example, 13 seater bus credit can be claimed. 35 seater bus credit can be claimed. For your XYZ company buys a 5 seater for their business. So 5 seater motor vehicle not allowed. Very, very simple. Now coming to similar things like motor vehicles, what we saw, even when we are having a boat, aircraft, plane, they all are not allowed. Very simple. It seems like a luxury. Whereas exception is if I'm further going to supply, if it is my business, transportation of my business, or I'm imparting training. So there are flying schools. So that's their business. So they can, if it is connected with business activity directly, then it is there. Then comes general insurance. Now general insurance, repairs, maintenance of what we did now, motor vehicle, vessel or aircraft will be allowed. If motor vehicle is allowed, if we saw, if it is coming in the business activity or you're imparting training or further supplying, if this is eligible, then on this, whatever insurance you are doing, whatever repairs you are doing and whatever maintenance you are doing, that also will be available. If this is rejected, if it is coming in the rejected category, then all this will also be, its ancillary things will also be rejected. Common sense. Next is food, beverages, catering services, cosmetic, plastic surgery. All this when you do for your employee is not allowed. So if I'm providing canteen services, hotel services, beauty treatment, spa treatment, taking them out, outdoors, all this is not allowed unless exception comes here if it is obligatory by an act, by law. So if by Factories Act it is said that when there are 250 more workers, canteen has to be provided. So if law is forcing you to do, then credit is available. Then comes again giving memberships and all of this to your employees, again it is not available. You are giving them, taking them on vacation, not available, but if you take them for a business trip, credit available. Works contract, they are simply saying that it is not available unless it is your business. Now this is interesting that always, so again, you are constructing an entire immovable property, construction of immovable property for your own use, not allowed. So if I'm constructing, Lodha is constructing an entire building where it will have its own headquarters, credit is not given. The compositions, dealers not allowed, we know this, credit ITC is not available. Non-resident taxable person not allowed, personal consumption not allowed, stolen, lost, destroyed, written off not allowed. You have to pay GST on a demand notice, then ITC will not be allowed for this also. Remember, only ITC even is only allowed when you're making plant and machinery. Okay, and plant and machinery includes all of this, but excludes, it does not exclude, it excludes land and building, telecom and pipelines allowed this. So for this ITC not available. Why, sir? Because very simple, they are saying that this plant and, when I say plant and machinery, it does not include all these things. Now for plant and machinery, one important thing I'm here. So plant and machinery is allowed. Just note it down that plant and machinery ITC is available, because logic, you don't even need to write plant and machinery direct use in business, it will be allowed. Clear? So we finished this also, section 17 subsection 5 also done. Okay, now we are going to section 18. Section 18 is also very, it's a cute provision. I cannot say it's good, bad. The correct term to call it is a cute provision. Now, when I say cute means what? I'm joking, okay? It's a very important provision. They ask a direct question, okay, of rule number 42. Many students don't know what is rule 42. It is the most repeatedly asked question in your exam. Rule number 42. Sir, please tell us. So I'll tell you. Don't worry about section 18. I have a short little technique to help all you innocent students. Okay, I have made something simple. Or in one go, section 18 will get over. In one go, section 18 I will be covering. Section 18 talks about special circumstances. In special case, first it was not taxable, now it became taxable. First I was in composition, now I came in regular. What happens there? So very simple. First I was in compulsory registration, now I had to do voluntary registration when I can claim my ITC. So ITC in special circumstances. Pay attention. It's a shortcut provision which I'm teaching you. First, you'll just write down what I'm telling you, that's it. So first, inputs held in stock. Person who has applied for registration within 30 days from the date of when he becomes liable, he can claim inputs held and of inputs and semi-finished goods as the day immediately preceding the day from which he was liable to pay tax. So what it is talking of, compulsory registration. First, for compulsory registration. Now if imagine my turnover increased, okay, now I have to start paying tax. Now when I have to start paying tax from today, I will say, listen, I need credits also. So they are saying whatever credit is available as on yesterday or day prior, all the credits, input tax, inputs, semi-finished goods, whatever is lying in stock, take a credit of it. Okay, immediately the day from which he is liable to pay the tax. Sir, very simple. Means, imagine if I became liable to pay tax year at this point. I had to pay liable. So then I have to start paying tax from here. So I will say whatever is held in inputs or day immediately preceding the day when I became liable, I can take the credit of it. Fair enough? Yes or no? Answer is yes. Now second one says if it is not a case of compulsory, it's a case of voluntary registration. So I voluntarily registered. So then they will say, okay, fine, same for you, inputs and semi-finished goods. You also take a credit for immediately the day preceding the date of registration. For example, I registered today. Whatever credits are available as on a day prior, immediately preceding the day of registration, I am eligible to the credit. So it's a fair provision, a very genuine provision. Then coming to registered person ceases to pay composition scheme and switches to the regular scheme. So a person from composition came to regular scheme. Now think what happens. Isn't it something like exempt became taxable? Because composition dealers are not allowed ITC. Now suddenly these come into a regular scheme where he is going to pay full-fledged tax. So he would also want credit. Same provision. One day prior, whatever is available, take a credit. So for inputs, and since he is coming now, he is going to pay full-fledged even capital goods. Immediately the day prior, he will be able to take the credit. And imagine now the reverse case. Now we are seeing of a reverse case from or exempt became taxable. Exempt became taxable. So we will say, listen, all the inputs that now you have to pay full fledged. This is the same provision as earlier. Whatever taxes were there, if I had to now become taxable, then 1 day prior, whatever is there, I am eligible to use it, and capital goods exclusively used. Now, in this, there is a 5% provision, the rule number 42, which I want to take you through, okay, which really is important. Now, market is important. The supply of plant and machinery, market is important. Now pay attention, I don't think they will ask you, but still remember, this is rule 42. What does it say? That listen, if I have to supply plant and machinery, imagine I have a plant and machinery, I sell it off. So when I'm selling also, they say that pay a tax on the transaction value of that plant and machinery. Imagine I'm selling it off a scrap, or I'm getting 1 lakh rupees. So 1 lakh rupees you pay tax, it will be treated as a sale. But they've given you one more thing to compare with, and they said whichever is higher. So very simple, if I'm selling a plant and machinery after using it, so whatever sale price it is, I have to pay GST on it. This is what they are saying. And one more figure they are saying, compare it with this. So when I'm making a supply of plant and machinery after use, if I'm supplying plant and machinery after use, so what's the provision? Very, very simple. That pay tax higher of the following. First is tax on transaction value. What is the given? Tax on the transaction value. So we'll compute what is the tax coming on transaction value, or whatever ITC you have claimed earlier, whatever ITC I must have claimed on the plant and machinery, reduced by, lessened by 5% for each quarter or part thereof. See, it's a very simple point, okay, don't get confused. So imagine if I have sold a plant and machinery for 5 lakhs. I have sold a plant and machinery for 5 lakhs. GST rate is 10%. So I will say, okay, fine, the first category I made it very easy for you. Tax on transaction value, so it will come to 50,000. Or I'll compare it the ITC claimed on this machinery. How much ITC you had claimed? So I say I had claimed 1 lakh rupees. For example, earlier I had claimed the benefit of 1 lakh. Now I have used it, so this 1 lakh will keep on reducing for 5% for each quarter. So let's say I have used it for 3 quarters. 9 months I have used, or even part thereof, then it will become a full quarter. So if I say 9 months and 1 day will be 4 quarters, part thereof full covers. So whatever, if I have covered for exact up to that quarter is fine, but if I go into 1 day extra also, the next quarter will be counted. So let's say I have used it for 3 quarters, so 15% it will be reduced. So if I reduce this by 15%, how much I'll get? This minus 15%, so I'll get 85,000. So I have to pay 50,000 or 85,000, whichever is higher. So I'll have to pay 85,000. So what is it? Tax on the transaction value. This is simple. Whatever transaction value into the tax rate you have to pay. Or the second category is, you find out on this plant and machinery earlier how much tax you had claimed the benefit, less by 25% for each quarter used. How many quarters you have used, minus. So I'll get a figure, whichever is higher is the thing. So this is it. There's nothing else they have to tell you. That is it. Very, very important. When you do few sums, you will come to know. Next is, remember to claim the credit. Now this is one important thing they can ask you. GST ITC 1 within 30 days of become eligible to claim the credit up to file. That's not that important, but if the credit you're claiming is exceeding 2 lakh rupees for voluntary registration, a CA certificate is needed. If you're claiming more than 2 lakh rupees credit, for voluntary registration, CA certificate is needed separately. And no ITC will be allowed for invoices after 1 year from the date of the issue. So invoices, whichever is there, I have bought it now. I have to put it up in the portal within 1 year. If I purchased goods now, I have to put it up. That is called as claiming of ITC. Should be within one year from the date of invoice. So that is it. We are done with that also. Now we are going to section number 19. Section 19, favorite question, job work. Job work. When goods are sent to a job worker to complete it. Okay. Now the principal buys the goods and he gives it to the job worker to complete. Okay. So rule is very simple. Rule is very simple. That this is the rule. Okay, so simple. What they are saying, the 1 year is for raw materials and 3 years is for capital goods. So pay attention. If the principal gives to the job worker the goods, principal will pay the tax because he is the owner. He will pay tax. He is paid the taxes. Goods are given to the job worker to complete a process. So the credit will be available to the principal only. Yes or no? I purchased. I paid the tax. Credit will be taken by me only. I have just given to the job worker to complete a process. Okay. Now it is the duty that he should return the goods within 1 year. If it is capital goods, then it is 3 years. Remember, for capital goods it is 1 year. For inputs it is 1 year. So capital goods have to be returned within 3 years. This has to be returned. Otherwise, whatever credit he is taken will have to be reversed. So again, principal can take credit of goods sent to job worker, provided okay, they are returned to him, because we've given it to complete a process. They should be returned within 1 year for inputs and within 3 years for capital goods. So this 1 and 3 years they keep asking. It's a very simple provision, but they still keep asking. Okay, so we are done with section 19 also. Now we are going to section 20. Okay, section 20 is input service distributor. Okay, now what is input service distributor? It's a very, very simple concept. Let me explain. Now this is the provision. So input service distributor is actually a head office. It is a head office, okay, which receives input service invoices. So for example, the head office is there, from which all the auditing bills, all the advertisement bills, all the other expenses bills are raised on the head office, right? For example, if you are dealing with Reliance Industries, you've done your audit, you will go to the head office and give the bill. So bill is coming to the head office. Now head office has all the input tax credits. Head office would have all the input tax credit, but from the head office there is no sale happening. Sale is happening from other states. Say one sale is happening from Maharashtra separate branch, Gujarat separate branch, and Punjab separate branch. Clear? So the head office has to distribute this credit to Maharashtra, to Gujarat, to Punjab, that listen, I am not selling credits. What will I do? Credit should be given to my branches. So they will have to be registered as an input service distributor. They will have to say that listen, I am a distributor. I will distribute this credit. I will give little bit to Maharashtra, little bit to Punjab, and little bit to your. For example, if ITC is of 1 lakh, he has credit of 1 lakh. He will distribute among the branches. So these branches, it will distribute on the basis of proportionate to the turnover. For example, if Maharashtra's proportionate turnover is 50%, whereas Gujarat is 10%, and 40% is by Punjab. The turnover, when we go to see the total turnover, we come to know that this is the proportion. So the credit will also be distributed in proportionate to the turnover. So here also 50,000 will be given, here credit of 10,000 will be given, and here credit of 40,000 will be given. What happened is we distributed the credit according to the turnover. So whatever is the percentage of turnover for each thing, accordingly that much credit only we will give. That is it. So we've completed the entire ITC provisions also, because ITC is only from section 16 to section 21. Clear? Now we will be doing the registrations and all of this, but we'll go fast on that, okay? Because those are very simple provisions. We are almost done with the topic. All the important key parts I've covered. Okay. Covered everything you will have to clear if you watch this, and my customs marathon. Ma'am has given everything to you in the morning. Do from that. Okay. Then 23. Let's see the other. You're understanding till here everything. Don't worry, you're in safe hands. You don't have to come. Okay. December 2022 questions, please solve. I will solve that questions. Don't worry. I'll solve all the questions and you all will solve with me. Okay. I'm going to make it so simple for you all. Then. Casual type. वहाँ से ही पढ़ा दूँ. Okay. Almost on the verge of completion. Okay. 31. Okay, till here everything is clear. Then we'll solve the December questions also. Then we come here, 31, then we go here. सब तीन ही दिखाने पड़े. Okay, so just give me 5 minutes. We'll return back in 5 minutes. Then we'll complete the balance part also. Okay, so in 5 minutes we return with the registrations. Then we'll directly come to the sums. Hi guys, am I audible to you all? Need a confirmation from you all so I can quickly start and begin. Are we set to go? Yes or no? I need a confirmation from you all in the chat box that I'm audible so I can quickly start and complete everything. भी हो गया 34 so many things are there. Quite 36 square returns. I think just pick it up from here and close it. Okay. Okay, am I audible to you all? Okay, great. Thank you so much. Let's begin. Hi, so we'll be starting with the GST registrations. A very simple topic. It starts from section number 22, ends on section number 30. What is important? Obviously, when do you require registration? It is turnover based. Section number 22 is turnover based. That if your turnover exceeds 20 lakhs, if you're a service provider or if you're a manufacturer, if it exceeds 40 lakhs, registration is mandatory. However, those falling under section 24 have to do compulsory registration irrespective of turnover. Means it is irrespective of turnover. Even before making one sale, they have to be registered. Then in between both of them, they have someone who is exempt from registration, will be generally a agriculturist. They cover the procedure for registration. They will give you the forms. Then this is there. Then from your, that's it. Okay, and that's one cancellation they are asking because there was an amendment. Very simple. For composition scheme, if a particular person has not filed his return for 3 months, his registration will be cancelled. For other persons who have not filed for 6 consecutive terms, then it will be revoked, cancelled. Okay, let's begin. One is turnover based, the other one is non-turnover based. Very simple. What is it, sir? For section 22, 20 lakh rupees, if it exceeds, they will have to get registered. For certain special category states, it's 10 lakhs. Okay. Now when we see here, important exemption notification was there saying that for manufacturers, okay, give exemption for registration of persons dealing in exclusive supply of goods whose turnover was does not exceed 40 lakhs. Okay, so basically for goods it is 40 lakh rupees they have given. Threshold limits is increased to 40 lakh rupees for supplier of goods. Okay. For some special category states, they have made it 10 and 20 lakhs. Okay, very simple. Now in this further, they have given you few thresholds. Okay, thresholds for who is 10 lakhs, who is 20 lakhs, who is 40 lakhs. Okay, this you will have to see. It's a bit of factual. Now when we see the registration and all the theory part, I'll be going a little faster. Okay, because I want to cover some important sums, especially for e-way bill and the other sums that come. So the theory part I'll take you all through quickly. So section 23 is about exemption. So certain person like agriculturists are exempt from GST registration. Then comes section 24, very important, who require compulsory registration irrespective of the turnover. For example, they ask this in the exam, that a person is supplying interstate goods, casual taxable person, those who are forming and who have to pay tax under RCM have to get registered irrespective of turnover. Those who are operating e-commerce operators or those who are selling through e-commerce operators. Those who are falling under section 51 or 52, TDS or TCS, both have to deduct both have to get compulsory registered. Then your input service distributors require compulsory registration. Then OIDAR services require compulsory registration, etc. So if I see here, you have your section number 20. So what is that? Input service distributor, compulsory registration. Section number 51, 52, TDS, TCS, compulsory registration. Then those who are coming in IGST, there is something called as OIDAR, online database access and retrieval service. They require compulsory. Those who give interstate require compulsory services. Then comes under section 25, there is casual taxable person and this non-resident taxable person. All of them require compulsory registration irrespective of this thing. Okay. Now, when you see your form numbers, you will have to just look through some of the forms. These are facts. Okay. So you will have to see, let's see, your registration will be in REG1. Acknowledgement will be in REG2. Additional notice can be, information can be asked in REG3. 4 is, important, where they can cancel your registration. Order of compliance, etc. Then REG6 is registration certificate is issued in 6. Okay, I think then it is sufficient. Application for registration for non-taxable person will be in REG10. Okay, just some facts. Then comes, interestingly, what are the provisions for casual taxable person and non-resident taxable person. So let's come to that. Where is it? Now we are seeing that is section number 27. Okay. Yeah. This is important. Casual taxable person and non-resident taxable person. Okay. Now what is it? Very, very simple. So basically, casual taxable person are persons who are doing business who don't have a permanent form of business. For example, I take a session in Chennai and I come back. I take a particular seminar or stock markets in New Delhi and I come back. Now I don't have a permanent or fixed place of business. But what GST officers started feeling that, listen, these businesses also, they take few sessions, few concerts, few exhibitions, and they make a huge amount of money in that thing, though they don't have a permanent form of business. So they have been covered under the casual taxable person. What law has said for them? Very, very simple, that they require to get registered irrespective of the turnover. Irrespective of turnover, even before starting the business, they have to get themselves registered. Irrespective of turnover, they require registration. We saw in this section number 24, compulsory registration. They have to apply before commencement of business. 5 days before the business, they will have to tell that, listen, I am coming and I expect, that I'm going to start this business. I'll have to take the registration. Registration will be in REG1, and they have to make a advance payment on the estimated tax liability. So if imagine a singer, Justin Bieber, or there is a Black Eyed Peas, they are coming in India performing, but before performance, they are casual tax or non-resident taxable persons. All of them, they are non-resident. Normally they don't come, but they'll come here 1-2 session, they will earn and go. So law says before commencing business, register. This registration certificate could be for 7 days, 10 days, for how much ever long your concert is going to happen. Okay. And you pay the tax in advance, because see, after the session is over, they'll leave. Who will run to catch them? So very, very important special provisions are there for casual taxable person and non-resident taxable person. First, a registration will be valid up to a period of 90 days. So they will apply even before the business, their registration will be valid, okay, up to 90 days. Then extension can be given, they will get a certificate. Advance tax has to be given by them. Advance deposit of GST on basis of the estimated tax liability. Sir, how will they come to know how much they are going to earn? So all the concerts, before the concert, they know how many tickets are sold. So on basis of that, they'll pay the this estimated tax liability. Okay, that is there. And for non-resident taxable person and casual taxable person, what's the difference? Both of them do not have permanent place of business. But the difference is very simple. He's a foreigner. This is a non-resident who's coming in India to do a short business and leave. For example, singers, foreign performers, they come in India, they earn and they go. They don't even have a PAN card. Okay, they will get registration on a GST REG 10. Okay, and they have to file a simplified return in GSTR 5. Okay, obviously the return forms you have to sit and learn. Okay, one question is short from the return forms. I can't make you sit and learn now, but I can at least tell you that it is important. Go through it, it will be very easy for you to learn. Now, casual taxable person, very simple, might be an Indian. Okay, means a person, he has a PAN card, this guy doesn't have a PAN card, this will be REG 1. Okay, and that's it. So that's the provision with respect to casual taxable persons. Now if we go to the other thing of GSTN numbers. Okay, now we're going to another important thing which has now been added, something called as e-invoicing. I had told this earlier also that a confirmed question will come from here, and it actually came in the exam also. If you see the past exam paper and you see my last marathon, I had told clearly that e-invoicing will come. It's very important, okay, because this is the future. So let's see, I will teach you all also what is e-invoicing. It's very new. There is a kind of thing. Understand what will happen in your accounting software. Now pay attention to this, stop, listen. What will happen, your accounting software is there, for example Tally. You will go, it will be connected with your GST network. You will just go, when you're there, you will have, whenever e-invoicing provisions are applicable, I'll tell you when it is applicable towards the end. Exam question comes on that. Whenever it is applicable, you have to create e-invoice. Sir, what is a e-invoice? E-invoice is something which is created through the portal, which creates a QR code. Okay, so it's very interesting. E-invoice is an electronic invoice through which a supplier has obtained an invoice reference number and a QR code through the government authorized portal, which is invoice registration portal. Sir, what? So on your particular software, you will go to the government site, which is invoice registration portal. Okay, so it will be integrated already. So your Tally will be integrated with the invoice registration portal. Moment you go there, you will say create a e-invoice. Okay, create e-invoice. When you will create a invoice, will be created an e-invoice format. You will get a invoice reference number, and that particular thing you will get a QR code. Clear? Once you get a QR code and a QRN number, it will punch. You will also have the details of the supplier and the recipient. Because of this, automated supplier will also be notified, and even recipient will be notified that the sale has taken place. So it's an automated thing which government has done, and now government is slowly reducing the requirement. They are bringing more and more businesses under this category, and over a period of time we will completely shift to e-invoicing. It's a very beautiful portal, okay, and very convenient portal. Only a registered e-invoice with SRN is considered as a valid, proper invoice number. Let's see. So it will look, so this is the actual how it will be there. Okay, this is the QR code will be generated. This is the invoice number. All the requirements you will see. QR code, this is the invoice. The details of the supplier, recipient will be given. And one more important thing is the IRN number. Invoice reference number will be created through e-invoice. That's it. Nothing. You just go in your portal and say create invoice. When you create invoice, it links to the government portal which generates this kind of invoice. With the help of the barcode, you can see the genuineness, and it already tracks and does everything. Okay. Now, who is required to have a e-invoice? Okay, they can ask you in the exam. So pay attention. Now this e-invoice had started from businesses having an annual turnover of 50 crores. They said that any business who has an annual business of 50 crores has to mandatorily use the e-invoicing system. Clear? Then they said now 50 crores or more, few companies were there. They wanted to bring in more companies, so they reduced it from, first it was 100. So from 100 crores, so very few companies came, because they said only businesses having a turnover of 100 crores or more had to use e-invoicing provision. Then they reduced it to 50 crores. Threshold limit was reduced to 50 from 100. Then they have further reduced it, further expanded it, turnover to 10 crores from 1st October 2022. So now they made it 10 crores. Okay. And just recently in 2023 August, 5 crores it will be applicable. 5 crores. All businesses having turnover of 5 crores will have to mandatorily create invoices through the e-invoicing. Concept clear? For your exam, see, this is not applicable. 2023, right? It's not yet come. So for us, 10 crores is the limit. Concept clear? But you have to remember that moment by my next marathon, you know that I will be saying 5 crores is the limit. Concept clear? So 10 crores annual turnover have to use e-invoicing facility. Okay, that's it. I'm done with e-invoicing also. 10 crores is the limit they can ask you. Then I just have to teach you a concept of debit and credit note. Many people don't know. They think they know, but they don't know. Now let's see. What I will teach you, what is a debit and credit note. Remember I told you in invoice provision, the last date to create this invoice was clearly mentioned as, they have reduced the timeline, right? From, in the amendments also I have told. So I told you my birthday was in October, so November. Okay, so you don't have to worry, but I'll tell you what is a credit and debit note is all I want to tell you. So let's talk of a, whenever there is a sales return, whenever there is a sales return, for example, I didn't like the sales, I tell, so generally it is from B to B, business partners talking to each other. Okay, understand what I'm saying. Business partners talking to each other. Business partner sold the goods. Business partner 1, business partner 2. Business partner 2 said, listen, I didn't like the goods which you have given. I'm returning it to you. So whatever tax was, whatever amount was there, credit note will be issued, and it will also include the tax amount. So that much amount is like a refund. Clear? So I can say whenever I have paid more, then what I should pay, a credit note will be issued. Credit note will give me an entitlement, right? That I have paid more. So when you go to a shop and you return the goods, a credit note is given. That means you had paid something. Now you are getting a sales return. Now this you can encash and use it. It is the money's worth. You would prefer to have a lot of credit notes. Credit note is something that this is a credit, you can use it for your future purchase. So it's very good, credit note will be issued. Debit note, so credit note is very simple. When it is issued, whenever the tax charge is more, I say listen, I'm refunding or tax is charged more. Tax is charged more. So a credit note will be issued to me. Listen, this much is extra. You can adjust this credit note somewhere in future when you have to make a payment. Goods are returned, etc. Now coming to debit note. Sir, what do you mean by debit note? Many people don't know. The simple, easy method of learning is a supplementary invoice. Supplementary invoice. Sir, what do you mean by supplementary invoice? If, for example, invoice creates a liability on me, debit note will also create a liability. So it's a supplementary or additional invoice. For example, imagine if the dealer, if B1 and B2, okay, I am B2, what happened? B1 charged rupees 1 lakh, okay, but actually he said, oh sorry, I made a mistake, I should have charged 1,50,000. I said, don't worry, you created an invoice for 1 lakh, now you create a debit note which is nothing but an invoice only of rupees 50,000. So it is an additional invoice. So whenever I have paid less, a debit note is nothing but an invoice only, and I have to pay that extra amount. So nobody wants debit notes. Everybody wants credit note. Just like you don't want debit in your account, you only want credits in your account. Similarly, credit notes gives you entitlements. When there is returns, when you paid extra, etc., you'll get a credit note. Debit note is the reverse. Very, very simple, very, very easy. So debit note, sir, can you show me what it is given? So debit note is an invoice, okay? So when it will be generated, whenever the tax charge is less than the actual payable. When the value is charged is less, okay, then what is payable? So then I will say, okay, give me a debit note. I accept it. Very simple. Let's move ahead. Debit note, credit note, clear. Let's move ahead to one little titsy bitsy thing. Okay, it's not a very big thing. Accounts have to be maintained. Obviously, all the details have to be maintained. Now, subsection 5 was omitted, where they had told that you have to get your accounts audited. Now, no longer accounts is required to be audited. This was omitted by Finance Act 2021. So that was one thing. But from here, what you to know is a period for retention of accounts. Market is important. This is your section number 36. This they can ask you in MCQ. Sirji, what do you mean by this? My accounts, how much time I have to retain? So very simple. The answer is very simple, 72 months. Okay, normally it should be done, preserved for a period of 72 months. What is the answer here? You have to preserve the accounts until a period of 72 months has lapsed from the date of furnishing the annual return. Sir, explain. You have to retain the accounts for a period of, you can't just destroy the accounts, right? 72 months you have to protect the account. So if there is any inquiry, you will have to produce. However, if it can be beyond that also, if there is a case pending, then you have to wait till the disposal of the case. So 72 months or 1 year after the disposal of any suit, appeal, revision, etc. So normal provisions are what it is, 72 months. But if the case goes on for more than 72 months and I have to wait for that period, once the disposal is there, then 1 year more I have to wait. Sir, very simple, very good, very easy. Okay. Sir, this is the book you've written, available on Amazon, Flipkart. Very good, very good. Very happy. Okay. No wonder sir is able to explain so well, so fast. He seems to be very, very experienced. Okay. Now, my job is to help you and impart the knowledge. That is all. Okay. Now remember, with respect to returns, okay, now I'm just going a bit fast because I want to cover something important. The theory part, I'm just explaining, rushing through everything, okay. And don't forget to like the video, okay. Especially when you like the video, don't forget to like it, okay. Past exam question also I will do, and I will make it a cakewalk where you find that this is a joke. You will find the entire examination as a joke, how easy you will find it, okay. So remember the returns, remember that I'm not going detail in returns. You have to read the numbers. I'll go a bit fast. I want to cover something important. GSTR 1 covers the outward supplies. All the sales will come in GSTR 1. GSTR 2A purchase details will come. GSTR 2B the ITC details will come. Okay. Normally it should get auto populated in the purchaser's detail. So it starts with the seller punching the details. And for 2A and 2B gets auto populated in the purchaser's account. So I will say, listen, I purchased from you, I sold to you, and all the details will come of the purchases. Then there will be a summary returns in GSTR 3B. GSTR 3B there will be summary returns. Now you can see this GSTR 1 outward return. There will be a table. You will have to go through that. Okay. 10th of the next month. Okay. This I'm not going in detail. You just have to read through all of this. When it is to be given, monthly returns 20th. This is fine. Okay. Then new dates are given, above, less, etc. Okay. So returns are there for composition dealer, GSTR 4. Payment will be done in GSTR CMP 08. GSTR 5 is a monthly return for non-resident taxable persons. Okay. Input service distributor will be on. So all this they ask. I'm just going fast, not that because it's not important, because this is factual. I'm telling you, you have to sit and read. Market is important. They will ask one from the table. So better to do all these things which you have to mug up right before the exam. So mark it up that just before the exam, I'll just quickly see so that I don't forget. And even flip the question. If you see, flip the question paper. Moment, just some minutes before the exam, you keep looking at these things. You see, quickly tick it and finish it off. Input service, they have asked so many times. Input service distributor, when it has to do by 13th of the next month. Returns has to be filed. TCS 7th. TCS 8, e-commerce operator by the 10th of the next month. Very, 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 very important. Okay. GSTR 9. I've told you also annual returns. By 31st of the next financial year, it is exempted up to those businesses which have up to 2 CR. They don't have to do. Okay. Then that's it. Okay. So I think we've covered most of them. So this is GSTR 1 also, monthly return for outward supplies for registered owners having a turnover greater than 5 crores by the 10th of the next month. Those who have up to, they get 13th of the month following the quarter. Okay. So this you can see the returns part, you will have to sit and study. But it's important. Okay. Now I'm going to start with something important. Okay, before I start with the sums, let me start with something important. Annual return you have to know by the 31st December it should be done, and GSTR 9. This is important. Then coming to TDS, TCS also, just one small little point I will tell you and quickly move ahead. Okay, in that 2,50,000 government bodies. Okay, that's all that you need to know. 2,50,000 government bodies. What, sir? Sir, 2,50,000 government body. Sir, please explain. So don't worry, I'll explain. Okay, what is the limit that TDS, tax deducted at source. Okay, tax deducted at source is when government owners making contractual payments where the total value of the taxable supply exceeds 2.5 CR, 2.5 lakhs. Okay, 2.5 lakhs. Then when making any payments, the government concerned shall deduct 2%, CGST 1% and SGST 1% in case of intrastate, and in case of 2% in case of IGST, and remit it to the appropriate account. An amount shown as TDS will be reflected in the cash ledger of the supplier. Very, very simple. Let's see if I have drawn it, or I will explain. Okay, so let me explain. If the government, there is a supplier, he is supplying services, he is supplying goods, or he is making some supplies to government or government department. Okay, and the government has to do a payment, of 2.5 lakhs or more. Or they've given exceeded. What they've given? Exceeding, I guess. So if they are entering into a contract to make a payment, if they have to make a payment of greater than 2.5 CR, 2.5 lakhs, okay, if the government has to make a payment of 2.5 lakhs or more as contractual payment, then the government has to deduct, government will be the deductor, will have to deduct 2%. Okay, 2% they will deduct. If it is intrastate, then IGST 2%, or if it is CGST or SGST, then they will deduct 1% and deposit it, and they will deposit it with the GST authorities. They will deposit this with the GST authority. The supplier will get the net amount. However, whatever payment is done by the government, the deductor, they will issue a TDS certificate, give it to the supplier that, listen, we have deducted for you, take this certificate. So the supplier will have proof that certain amount has been paid, okay, on his behalf. So let's see, TDS, if the total value, TDS at the rate 1%, 1% means I'm talking of CGST, HGST another 1%, total 2. Deductor shall deduct 1% from the payment and credit it to the supplier, called as a deductee. Okay, where the contract size exceeds 2.5 lakhs. I've given you 2%. Then very important, the time limit to deposit the tax. Now government authorities also have a time limit. Okay, because imagine there is a government department, BMC, municipal body, anyone could be there, and we are talking of the GST. We want the GST. So the amount deducted as tax shall be paid to the government by the deductor within 10 days after the end of the month in GSTR 7. Mark it as important. This they can ask you in MCQ. So for deduction, this amount should come within 10 days. Now they are saying that a certificate will be issued. Very important. So 7 and 7A. Remember 7 and 7A. The TDS certificate will be furnished to the deductee. So the supplier, we will give him, take this certificate. We have deducted 2%, and this is the proof. You can show it wherever it is needed. That is it. Okay. So this is the important part. We are done. 252 talks about very simple, same percentage. It is for e-commerce operators. Now I'm going into something other than this, also important. Audit, special audit, general audit. You can read it. Very simple. Different kinds of assessment is there. Not getting into that. Refund provisions, very important. Nowadays they started asking refunds a lot. Okay, remember you have to apply 2 years. That refund provision, please read RFD 01. You have to apply to get the refund. Refund provision, wherever it is you mark. It's a small little titsy bitsy thing, but they ask 1 and 1 to this year. I'm explaining things which are little technical. Okay. Now coming to the very important thing is the e-way bill. E-way bill, short exam question. They keep asking multiple times. Okay, what are we doing? First is e-way bill. Now what is the limit? Let's see. So e-way bill, okay, is a electronic bill. It's a transport document. It is nothing but a transport document. Whenever you're carrying goods exceeding 50,000, you have to create this particular e-way bill. Okay, so the sender and the driver, the transporter, both have to comply with this. So government will come to know that in India how many goods are being transferred and what all is there, because before dispatch only have to create this bill. I'll tell you what are the contents, etc. But the word I want you to remember is exceeding 50,000, you're transporting goods, you have to create a e-way bill. When you create the e-way bill from the GST portal, you will get an e-way bill number. Simple. Yes. Okay. The rule is given in rule number 138. We will be doing. Okay. And the government, this power comes from section number 68, where it says inspections of good in transit. So whenever goods are being transported, officers have a power to stop it and say that where is the e-way bill? Show me. If it is not there, they will detain the car. Now this is what the e-way bill looks like. This is an actual e-way bill. There is a part A which contains the detail of where you are going, what you are doing, what you are taking, HSN code, everything. And part B contains the vehicle number. So e-way bill 1 consists of the details of the goods and the transaction, and part B consists of the vehicle number. Very simple, very easy. Okay. Now it should exceed. And when is e-way bill required to be made? Before, after, during the transport. When? So the answer is even prior to commencement of movement of goods. So pretty scary provision that even before starting the journey I have to create this bill. Otherwise your goods will get detained. Compulsory e-way bill. Now some fall under compulsory e-way bill. Market is important. That is irrespective, even if it is less than 50,000, e-way bill has to be done. Very simple. When it is mandatory for interstate goods. Okay, interstate goods, irrespective of 50,000 or no less, you will have to create a e-way bill. So e-way bill are if the goods are sent by the principal to the job worker interstate basis, or the goods are handicraft goods. So this is irrespective of the 50,000. So some come under the exception. Even if it is not there, they have to do. Now validity of e-way bill, a confirmed short exam question, which is such a easy question, is fully scoring. What is this? This is the limit. Just remember all these other things you don't have to remember. 1 day for 200 kilometers, and after that, how many ever kilometers you have, that many days the validity of the e-way bill will be. For example, if imagine I will have to go for 300 kilometers. 300 kilometers. So e-way bill validity will be for 2 days, because for 300 kilometers also I will require 3 days is enough. So validity of e-way bill up to 200 kilometers is 1 day. So in 1 day you have to cover the journey. If it is more than 200, up to 400 you could say, then one more additional day you get. So for every additional day it will keep on getting. So if I say I have 600 kilometers to cover, it will be 3 days will be the validity of the e-way bill. But if it is these really over dimensional cargoes, really big cargoes which have multiple wheels, 6-7 wheels, so then we say they will go slowly. So to cover 20 kilometers they get 1 day. Okay, so this is the e-way bill provision, that it will now be valid 1 day for every 2 kilometers. 200 kilometers, this is it. 1 day for every 200 kilometers. Sir, okay. Now let me show you this. Communication, again basic stuff. That communication of e-way bill and its acceptance, the details of the e-way bill shall be communicated to the other party, and if no communication is received within 72 hours of the details being made available, it shall be regarded as deemed acceptance. So if we made a communication to the opposite side that a e-way bill is there, the other side has to accept it. If they're within 72 hours, if they're not accepted, it is deemed acceptance. Chaliye, do this sum and tell me what is the answer. There is a last in the past exam also they've asked a question, very simple, very baby question. What is it? That where the goods are dispatched for 280 kilometers. So 280 up till 200 is 1 day, a little bit more, again 200, 1 day will be given. So you will get a validity of 2 days. Very, very simple. Okay, because for every 200 kilometers or part, they get 1 additional day. So this is 2 days, as simple as that. Okay, now one more thing is, when they say the consignment value, when I have to calculate 50,000, okay, so 50,000 will include the GST or it will exclude the GST. For example, the goods value is 48,000. When I add up the GST is coming to 52. E-way bill necessary or not necessary? So here remember, we want to take control. We want more and more disclosures to make. So we are including the GST amount. So very, very important. They might ask you that is e-way bill required? Value is 40,000 or value is 45,000, GST is 6,000. We will take the total figure inclusive of GST to compute the consignment value. And then we are trying to tell company that listen, we want you to generate a e-way bill, but it excludes value of exempt goods. So exempt goods should not be taken into consideration. So this will only be understood with the help of an example. Okay, now this is a CS final exam question. Okay, but let's see. Amar Publishing, he's making a single consignment. Value of exempted goods is here. Value of taxable supplies is here. Value of goods sent to unregistered job worker is there, is this much. All the amounts given are excluding of GST. Compute the consignment value for the e-way bill for interstate sale. So we will say that it shall exclude this thing, it shall be declared a bill of supply. So taxable value plus the GST interstate will be added, plus all of this will be added. Challan total consignment value will be computed. This is just to compute the consignment value. You have to add up. So they've given you what all is to be added. I don't think they will ask you this level of questions, but see what all they are saying in the consignment value definition only they've said what all is to be added. So you will add up invoice, bill of supply also will be added, delivery challan, and also includes the GST. Okay, so all this will be added. Okay, not important for you at the moment. Then they can ask you, e-way bill 1, 2, 3, 4. Very simple. E-way bill 1 is creation, 2 is consolidated e-way bill. When there are 2 or more, if I'm taking for 2-3 suppliers e-way bill, then the transporter will carry all the consolidated e-way bills. E-way bill 3, if your this has been caught in between, so a summary report will be made by the officer, final report will be made in part B in e-way bill 3. In e-way bill 4, the officer will put up the details of the vehicles that he has detained. So in e-way bill 3, so in 3 and 4 is something where you have got caught. In 3, you will have to, a summary report will be made, and in 4, they will note down the vehicle details. Officer. Okay. That is it. Nothing else that you need to know for e-way bill. Cancellation of I don't think they will ask, but still, e-way bill can be cancelled if the goods are not transported within 24 hours of the generation of the bill. So, moment I generate the bill, the transportation journey should start within 24 hours. Otherwise, the e-way bill will get cancelled. Okay. Very simple, very easy. Now, think I've covered everything. Only one part is there, which is your payment of tax. Okay. This is the sums part which is there. Okay. What all is to be added, what all is not to be added. Very simple. Okay. So, there are 3 kinds of ledgers. Listen, whenever a dealer is there, as you have your Facebook account, same way a supplier will have a GST account. In the GST account, he will have 3 ledgers. One ledger will be a cash ledger, second will be a credit ledger, and third will be a liability ledger. Market is important. They ask one question from here for sure. In cash ledger, credit ledger will be all of my taxes which I have paid while my time of purchases. Credit ledger, or if I made any purchases, I'll put it up in my credit ledger. All the sales that I have done, output tax, all my sales, my output details will be in liability ledger. So what is this cash ledger? I'll explain. So if imagine if this simple transaction is there, okay, this simple transaction, pay attention what I'm saying. If I have made a sale and I have collected 50,000, I have credit of 35,000. Okay. So then the balance amount I have to pay to GST, to pay to the government, because 50,000 is my liability. Credit I have of 35, but balance I have to pay now 15,000. So basically GST, this 15,000 will be paid in cash. So I will use my cash ledger. I will put 15,000 in the cash ledger and I will make this payment. This I will use my credit ledger. All the details of my ITCs are put in credit ledger, and all the details of my sales, okay, will be there in my liability ledger, because whatever I've collected on sales is my liability. I have to pay to the government, but I will take a credit. Even after the credit, there will be still amount left. I will have to use my cash ledger to make the payment. Very simple, very easy. All 3 are clear. Now remember, the credit, GST credit, can only be used to pay. Now pay attention, market important. Okay, it can only be used to make payment of tax only. In no other amount such as interest, penalty, fees can be used. Very important. 2-3 times they have asked, can you use credit, your ITC credits, to pay interest, penalty, fees? Answer is no. Only for tax. So for payment of interest, penalty, and other kind of late fees, etc., I have to remove from my pocket. I have to put cash in the cash ledger. It's like Paytm. I have to fill in cash, and from this I will make this payment. Set off is only allowed for tax, not for penalties and punishments. Clear? This is simple. So I'm covering everything. You see, everything will be from here. Okay, you can be rest assured. I will take you to the past exam questions also. You will come to know it's very simple. I'm mostly covering everything. Okay. Now we see the sequence of using this credit. Okay, this payments of credit, etc. Now let's see. Okay, so ITC manner of using the credit, very simple. Imagine, let me explain what does it mean. Credit means like a voucher. Can I use my pantaloons voucher to set off my chroma liability? Yes or no? I need a yes or no. Can I use, I'm giving a really stupid example to explain you a very important thing. So, can I use my pantaloons credit to set off chroma liability? Answer is no. If I have a chroma credit, chroma store ka credit, if I have a credit of a chroma store, I can use it to set off chroma liability. So always remember, credit cannot just be used anywhere. You have to see which goes with which. Similarly, CGST credit can be used to set off CGST liability. SGST credit can be used to set off SGST liability. Clear? You can't use, because in the law we are going to see what all is not allowed. CGST credit cannot be used for SGST liability, or SGST credit cannot be used to set off CGST liability. This is not allowed. This is called as cross utilization between C and S is not allowed. Just like I told you, pantaloons credit cannot be used for chroma liability. So same way, C and S cannot be set off against each other. C can be set off against C, S can be set off against S. I, we will see what is the I, because I has both components inbuilt. In IGST you have C and S inbuilt actually. So there is a separate provision, but remember this cannot be done. And even remember this and UT is also the same point. UT also stands on the same thing. So C cannot be used to set off UT GST liability also. This was a past exam question. So how does the credit system work? So this is one thing which is important. They've asked, suppose one dealer has a credit of 5 lakh rupees. This dealer has a credit of 5 lakhs. He wants to pay interest with this credit. Answer is he is not allowed to pay interest and penalty with the credit. He has to pay from cash. He has to deposit cash in the cash ledger and pay the tax. Now let's see how this liability system works. Okay, now we are seeing the liability, how does it work, then we'll do some sums so that you understand it better. Okay, if you watch this you will get maximum marks, everything will be done. I know what I'm doing. I'll take you through the past exam questions. You'll realize I've covered everything. Just be with me, whatever I'm telling, listen to me. Okay, now first is manner of utilization of credit. So if imagine I have a IGST credit, okay, IGST credit, and let's say this is the liability. So if I have a IGST credit, I will first use it to pay off IGST liability, and then I can use it to pay C or S, any order, any proportion, we'll see. Then you can use however you want. CGST can be used to first set off CGST liability. Then if money is left, then still if CGST is there, it can be used to set off IGST liability. C and I is allowed because I always has component of C also. SGST credit can first be used to set off SGST liability. Then SGST credit can be used to set off I. So I can be used everywhere. See, if you see, I is being used everywhere and here also. So I is not a problem because it has component of C and S. Both it can be used. UT GST will be set off against UT GST liability, and if it is left, then IGST. So UT cannot be used against the state also. So UT will first be used for payment of UT. If it is left, then I. I is like, you know, universal donor. It goes with everyone. So what are the provisions? Let's see. I will simplify and show you also. Okay, then you have to solve the sums with me and then you're sorted. Okay, this is the only type of sums that come. I've covered. Now this is this. Now credit is always good, so I'm very happy with the credit. Credit is my love. Okay, because you will get credit, cash, monetary benefit. So credit of I will first be utilized for payment of I liability. So you will first, I will be used to first pay I, then balance you can use for the other, UT, I, S, whichever you want. Any order, any proportion. But I has to first be used to pay off I liability, then you can use for the others. So C and S can be U, or UT can only be used after credit of IGST is fully utilized. So I has to be completely utilized first. So IGST has to be completely utilized before using other credits. Before using other credits. So I will be there. I will take you through the sums, you will come to know. So I is there, it will first be used to pay I, then the others. If there is a credit of CGST, it will first be used to pay C, then if it is left, then IGST. S or U will first be used to pay that, then so first you will try to set up your nature kind of thing, right? Then you will go to the others. So this is there. One more point what they have given, that IGST should first be used to pay IGST completely. If IGST is left, then it will be used to pay C, S in any order, any proportion. So I is good. When you start with the credit of C or S, then use when only when credit of IGST is fully exhausted. So you can use C and S credit only after I is fully exhausted. C and S will be used to first pay CGST liability, then IGST liability. So remember, the first point is to use up complete. So remember these cards, IGST will be completely used off. Only then I will go to the other one. Then I is completely over. Then I will use C. C will first be used to pay C. Then left. Then it will use to pay I. Then when we come to SGST also. So first we are saying first completely IGST should be used off. Credit should be used off because it is a universal donor. Can be set off against everyone. Then if still liability is left, then I will say I is over, now pick up C. C will go first with C, then with I. SGST first it will go with S, then it will go with I. Cross utilization between C, S, I, not UT is not allowed. Let's start with the sums. So first, how much he has to deposit to settle? We saw that credit is not allowed, GST credit is not allowed to pay interest, penalty and fines. It has to be paid through cash ledger only. Now again, suppose one dealer has a credit of 4 lakh rupees in his IGST ledger. Okay, these are exam questions that I am doing. I want you to be with me, okay? Now, suppose one dealer has a SGST credit of 4 lakh rupees in his IGST ledger, and at the same time he has CGST output liability here. What should be the amount deposited in his electronic cash ledger maintained in? So again, he has a SGST credit and he has a CGST liability. So CGST liability he has to pay CGST of 3 lakhs. But credit he has of pantaloons of SGST of 4 lakhs. Can he use? Answer is no. So he will have to pay in cash 3 lakh rupees and he has to do, because C and S cannot be cross utilized. So C, full amount he has to. Output tax liabilities of 3 lakhs. So he has to pay 3 lakhs from his pocket. So C, answer is C. Then another question, suppose a dealer has IGST credit of 4 lakh rupees. He has IGST credit of 4 lakhs in his ITC ledger, and the same time he has a IGST liability or CGST and SGST liability. What an amount that the dealer has to first deposit in CGST to discharge his liability to file the returns. Okay, so let's see what he has to pay and what he has. So he has a credit of I, he has a liability of I, liability. So very simple. He has a credit, I GST credit he has of how much? 4 lakhs. And he has a liability of IGST 2 lakhs, CGST liability he has of 3 lakhs, and SGST liability he has of 5 lakhs. So how much he should put in the cash ledger? So let's see. So IGST will first be completely used to pay I. So this I will use to pay I. So I will pay this 2 lakh rupees here. This is 0. So 2 lakhs gone. Now 2 lakhs remaining. Then I will use IGST to pay, let's say, CGST. So CGST I will take and I will pay this. And so I can use it in any order, any proportion. 50-50 I can do, full I can use my wish for CNS. So imagine if I have used it completely, 2 lakhs. So I will have CGST liability of 1 lakh and SGST liability of 5 lakhs. So 6 lakhs he has to put in cash. Okay. So 6 lakhs he will put in cash. A. Clear? So this order they have given. Then comes this kind of dirty little question, okay, which ends up scaring the students, but it must be very easy. Okay, Radhe company registered a supplier paying to GST under the regular scheme and interstate supply of this much and intrastate of this much. He is liable. So this is an exam question. Can you try doing it? It's an exam question. Can you do it? What is there? Let's see. All I need to know is what is his credit. All I need to know his credit. And I need to know his liabilities that he has to pay. So let's read. Interstate taxable supply he has made, and he's made an interstate supply. So with supply will be your liability. He has made a interstate supply. Interstate supply of 8 lakh rupees. That's rupees, okay. And intra, that is within the states, he's made a sale of 6 lakhs. Now this CS 9918. So you will see inter will be IGST of 18 on this liability will come. Then intra, then on intra we'll have 9% C and 9% S. So with this I will get my total liabilities. I will come to know that what is the liability here, right? Liability I will get. Now credit. He is having a ITC under of rupees CGST. He has credit of 30,000. Then SGST has a credit of 20,000. So now we have to find. So we'll get how much is CGST liability, how much is SGST and IGST liability. Then you minus with the credit liability, you will get the answer. Okay. So that is it. I'm done with the sums part also. Now just one thing. Remember, I will be sharing one very important PDF. From there the sums will come. Sums will come from one PDF which I will share in the WhatsApp group. You all need to join the WhatsApp group. I will share that PDF with you all. I will share the amendment sheet as well as the sums which will come in your exams. Okay, those sums which I will share will come in your exam. So please go ahead, join the WhatsApp group. The last titsy bitsy thing I need to cover, okay, is your small little baby provisions of other acts. Okay, let's see which are the other acts. This might take time. Okay, other acts is also covered, IGST, and yeah, I will be sharing it, don't worry. The link is in of the WhatsApp group is there in the description, or you please join the Telegram group, Jahangir Tutorials. Okay, I will be sharing The sums which will come, you will be shocked. I have already shared the custom sums. Sums are going to come exactly like that. Even the PDF which I will share now today, sums will come like that only. It won't come anything different. Okay. So I know I have done all of this. Okay. So I know what comes in the exam. I'll be sharing that with you all. Please join that. Now again, IGST is there. Okay. IGST. Now in IGST they just ask one thing, place of provision of service. Okay, now IGST, I'll just take you through what comes in the exam. There is one thing called as section 10. Section 10 comes in the exam. Sir, will I pass? You will get exemption if you listen to all of this, covering everything. Okay. Okay. This is such beautiful stuff made. So, you should learn GST in depth. So, I made this entire book. That's why I can tell you all of this. But whatever. This is the section 10 that comes in the exam. Okay. So, this we are doing IGST section 10. This is what comes in the exam. Okay. Section 10. This comes in exam. Now many people say IGST, they don't know only what comes in the exam. This section 10 comes in the exam. IGST comes in exam. This is of IGST Act. So easy, tough, very simple. Pay attention. Now section 10, what we are trying to do is find the place of supply. Place of supply other than supply of imported or exported goods. So these are all domestic that we are talking, other than imported exported, means we are talking of completely domestic sales. This is domestic sales in India only, which sales has happened. So we want to know which is the place of supply. Sir, why place of supply? Because as we did time of supply, we come to know the deemed place where time is supposed to be given and the rules apply accordingly. Similarly, we try to find out whether the place of supply is in Maharashtra, Gujarat, Tamil Nadu, or it is out of India. Accordingly, the rates and the governments, those will earn, or we may or may not be able to levy the tax. So first thing, if movement of goods are there, if imagine movement of goods are there. Now imagine, please tell in which state you all live. Imagine I have taught you all almost, this is the last group 1 subject there. Okay, I have covered so many things, the last push to help you clear. Wouldn't you want to send a rose to me? A small little rose or a box of chocolates to me? Yes or no? Please mention in the chat box the state from which you belong. The state. I'm trying to teach you something important. I might take 2 minutes. Tell me the state from which you belong in the chat box quickly. In the chat box, do you all in which state you all belong? And another thing is, do you all want to give me a box of chocolate or a kind of rose just for helping you out at the last moment? Okay, I always do this. I always enjoy. But I'm just waiting for some of you all at least to put. Tamil Nadu, great. What about others? Coimbatore, Lakshmi, great. US, 20. I hope that's not your name. Okay. Great. Aishi, Maharashtra. Great. Chale. Very, very good. Tamil Nadu. So now let me explain. What I'm saying. I live in Maharashtra. Okay. I live in Maharashtra. Okay. Telangana, great. Now imagine you all want to gift me something. And let's take the example of Madhu. Okay. Madhu is from Tamil Nadu. Okay. Tamil Nadu. She wants to gift me. She wants to send some goods to me. She wants to give me a box of chocolate. Okay, box of chocolate you want to give. Now, don't you think it's an interstate supply? It's one state to another state. So the question comes up that which government will get the tax? Whether Tamil Nadu will get or Maharashtra will get. See, ultimately IGST will be levied, but central government has to decide which state will get the 50% revenue. 50 they will keep, but 50% in the back end they can't deposit. They have to give it to the state. Which state? So we will have to find, as per the place of supply rules, we will see which is the deemed place of supply. We have to see that law is saying the deemed place of supply, because two states are being hit when it is being transported. So what they are saying, when there is movement of goods, the location at the time which the movement terminates for delivery. So basically deemed place of supply is Maharashtra. Understood? Yes or no? So your place of supply is Maharashtra. Remember this is a short exam question they asked from section 10. I have seen the paper, so I know, so I am telling you. Maharashtra is the place of supply where the goods terminate for delivery. So where the goods terminate for delivery. Okay. Very good. First point is over. Sir, beautifully explained. Next is bill to ship to. Now imagine bill to ship to model. Sir, what do you mean by bill to ship to? I'll explain. Bill will come to one, goods will go to someone else. For example, you all have shown so much love to me. Okay. So then I feel that I should also in return do something for you all. So then I tell that, listen, I want to gift you all a Apple phone. So I will tell Apple company, bill it to me, ship it to them. See, what is happening is, bill to Zubair in Maharashtra, but the goods will be shipped. It will be shipped to, let's say there is another student, okay, who is from Coimbatore, Lakshmi, okay, she is from Coimbatore. Now, what is the scene? I am saying bill to me, ship to her. So what Apple company will do? Apple, they will bill to me but ship to her. So the question comes that, listen, which state, where is the supply deemed to be given? Coimbatore or Maharashtra? Because whichever state we know is the place of supply, that is when that government will own, that rules will apply there, collection will be done there, payment will be done there. So which is the place of supply? Now this, when two or more states hit, then we have these rules. So the deemed place of supply we are seeing when it is a bill to ship to model. Okay, they say that it shall be deemed. So where the goods are delivered to the supplier, where the goods are delivered by the supplier to the recipient or any other person on direction of a third person, whether acting as an agent before or during the movement of goods, either by way of transfer to the title of goods, it shall be deemed that the third person has received the goods and the place of supply shall be the principal place of business of such person. So where the goods are delivered by the supplier to the recipient, I am the third party here, I didn't receive the goods, it will be deemed that the third person has received the goods. So here, who is the third person? Bill to me. So I am the third person. She is actually the recipient. Apple is the supplier. So Apple has supplied to the recipient in Coimbatore, but still it will be deemed that the place of business of the third party on whose instructions Apple gave to recipient will be there. So here it will be, so bill to ship to, remember, whoever is the bill sent to, that guy is the boss, that state will be the one which is deemed place of supply. Where it does not involve movement of goods. If it does not involve movement of goods, then the location of such goods at the time of delivery of recipient over the counter sale. I go, I buy, oh, there is no movement of goods. Okay, so it will be where the goods have been delivered. Very simple. Then 10(1)(d), installation and assembly. Place of installation. For example, if I reside here but I tell that my factory is in Pune, go and install the plant and machinery in Pune. Or if I say, so wherever is the place of installation will be covered. Next is goods supplied on conveyance. This is the most frequently asked. Okay, so location of such goods taken on board. This is the past exam question. So where the location of goods taken on board. So let me explain another example. what happened is I was going to so this is Zubair of Maharashtra going to Dubai. Where am I going? I'm going to Dubai. And actually I'm planning to go to UK, United Kingdom, London. Okay. Now when I'm going to London, the plane is going to have certain stopovers. One stopover is going to be in Delhi. Then it is going to go to UK. Now what happened is, imagine with respect to certain food, imagine Emirates. I have registered, my flight ticket is of Emirates. The person went and entered in Emirates, Maharashtra. There was a stopover in Delhi where the food was loaded here. Food was loaded in Delhi. Then in the flight, I ordered a food and I ate. So question, I ordered separately. I was hungry. In the plane ticket did not include. I ordered separately. I ordered something on the plane. So then the question comes, at which place should I take the food? Because bill will be generated. It is a separate transaction I have done. So whether it be Maharashtra, whether it be Delhi, whether it be UK. So they say, listen, where the goods were loaded, because from there the thing. So this is the deemed place of supply. This is the deemed place of supply. So location of recipient doesn't matter. Clear? So what they've said, see, where it is supplied on board, then location when the goods were taken on board. Clear? So this is important. I've explained to you all. This is important from this point. Okay. So we are done with almost everything. Nothing else that I feel is important that I've left out. E-way bill covered, assessment, everything else covered. Okay. Almost everything else I've covered actually. Even GST I've covered. I'm very proud. So remember, assessment could be by taxpayer and by authorities. If it is by the taxpayer, self-assessment, but by authorities, it is where it comes into play. So first is your provisional assessment. So let's see what is provisional assessment. Provisional assessment, if I could not determine, I could not determine the tax liability or the rate. I go to the officer, please do a provisional temporary assessment. You tell me what it is. Temporary I will pay. Later whatever is the final amount, I will differential. After provisionally temporary, final comes high or low, I will pay that time. Okay, this is there. The difference will be paid by me. Summary assessment, if I feel that some person is going to abscond, then immediately assessment will be done because we feel he is going to abscond from India. Scrutiny of returns, if the returns are not filed properly or if the officer doubts the verification of returns, he can do a audit. Special audit can be done, or a general audit is just generally, but special audit is when he feels that there is something wrong. Okay, non-filers, best judgment assessment can be done in two cases. For non-filers, those who have not filed, then they will have to decide by themselves, or a person who is unregistered but should have been registered. For them, best judgment assessment will be done. I think this is also done. Now, I think one I told is important, but I'm moving ahead, so I'm completing that also. This is the returns. Now, remember, returns are also important now this is refunds actually, Refunds, what is important? If imagine I have shut down the business, whatever ITCs are there, I can claim the refund. Refund is claimed in RFD 01 within 2 years from the relevant date. The form should also be certified by chartered accountant. This is the most important. Now, whenever government gives refund, they give at a very low percentage. They give only 60%. If refund is not given within 60 days from the date of receipt, interest at the rate 6% will be given. So 2 years, within 2 years I have to claim for the refund. I claim for the refund, in the 60 days I will get the credit. If I don't get the refund, then 6% interest I will get till they repay. That's all. Okay, if the refund amount exceeds 2 lakh rupees, then a certificate from chartered accountant will have to be taken. That is it. Okay, so I think I've completed full GST completely I have covered with all the topics, everything. Okay, now only one thing I have to tell you all is I'm going to tell you a very important thing on how do you get a exemption. Okay, now to get a exemption in tax, very simple. You have to watch both my lectures. Pay attention now. This is the most important part. You want to get an exemption. I know. I'm showing you how do you get the exemption. I've covered everything. Oh wait, one more. I'll take you to the December paper also in some time. Okay, I'm taking you through the December paper. Chaliye. Let's do the December 2022 paper. Okay, MCQ solved. I'm ready for the December 2022 paper. I'm solving it. Okay, I want all of you all first to like the video, be confident, keep a smile, you all will get an exemption anyway. Okay, I'm teaching you, so don't have anything to worry about. Okay, or everything I've covered, GST, nobody can ever cover so many things in such a short time. I'm also shocked. Let's start. I want all of you all to tell okay, etc. You know, a little bit of positive energy in the chat box, whatever it is. Okay, let's start and finish off the December 2022 paper. Now I think one student very special. Okay, let's see, a recommendation has been there to do, request has been done to solve the past attempt paper. So let's solve the past attempt paper in a really short time and let's see whether I've covered. One I forgot is, I'll take you through that also. One second, wait. I'm doing the exam MCQs. Please join the WhatsApp group. Don't miss it. I'm going to give you the exam questions which are going to come. Okay, according to me, these are the most important. Don't even miss by mistake that thing. Be in the WhatsApp group. I will be sharing that. WhatsApp group is given in the description, or go in the Telegram group, Jahangir Tutorials. I will send the WhatsApp group link. I'm going to share the one file with you all of all the sums that comes. It's a very short, concise sums. But from there only it will come. This is one thing. Before I start, I just had to do one more thing. That is the UT GST I did not cover. Okay, UT GST I did not cover. So let me just do that. Okay. Zoopy doopy. Zoop zoop zoop. Now we are doing UT GST. Other acts, you know. Now we are doing one baby act which is UT GST. Let's see if I can find it through. UT GST is super simple and super easy. And compensation cess is also there. Forgot to tell you. Yeah. So let's do that also. Let's finish the portion. Why not? You'd worked so hard. You all have sat so long. Why leave anything? Okay. And don't forget to put in positive statements. I feel very good on reading that I'm able to help you. Just motivates me to act much more aggressively helpful. Okay. So now we are doing two more things and that's it. Yeah. Actually, yeah. Okay. So So we'll be doing GST compensation cess, quick rapid fire. Now, remember the GST compensation act was supposed to be only till 2022, but it has now extended to 2026. The growth rate that has been put up, okay, what was GST compensation says that, listen, with the implementation of GST, many states would have faced loss of revenue. So the central government guaranteed the states that, listen, if there is any kind of loss, the central government will compensate. To create this, they have started putting taxes on certain thing called the GST compensation cess. A separate GST compensation fund has been made, and whenever we see that any state has got less GST than they should have got with the previous regime, in maybe you must have earned more in excise service, then central government will compensate. So what they have done is they've taken the base year, 2015-16. In that they said that how much was your base year revenue? Base year revenue they have taken. How much you used to earn? How much you used to earn in your 15-16? So then they said we used to earn X amount. Then they said after that plus 14% you do every year. This should be your actual revenue. Plus 14% should be there every year. If it is not more, if you don't get that much amount, 14% by implementing GST, then the differential we will compensate. So 14% was taken as the growth rate because that was the base year, plus 14 plus 14 plus 14. This should always be your revenue. Anything less than that we will refill it by compensating. Okay, and this compensation government is going to do bi-monthly calculation. So we will see every 2 months, did you get the necessary amount? No, take this amount as compensation, close it. Okay, that is it. Okay, this is all about that. And they made a GST compensation fund. The fund is there. Then they have said the base year is 15-16. The base year revenue, they will take all the taxes with GST replaced, because now these taxes won't be there. VAT, CST, octroi, amusement tax, entertainment tax. Now these are not there. These all have been subsumed in GST. So we will add it up, but we will not add up. We will exclude the things which are not repealed by GST. Tax on petroleum, revenue on petroleum, crude, which is not been repealed. So that will not be added. Projected revenue. So whatever year I have to compute, I will say plus 14, plus 14, plus 14. I will come to know the base year revenue. Every then if that revenue is not that much, every 2 months I'll keep checking. Did you guess less for the 2 months? Yes. Bi-monthly we will keep paying you. That is it. That is the law, and then nothing more in CGST. This has been extended, and to cover this tax, because central government also has to pay and compensate to the states, from where they will get. So 2 kinds of goods have been covered: demerit goods and luxury goods. So demerit goods like pan masala have been GST compensation cess is there, tobacco GST compensation is there, and luxury products also. Luxury, imagine if a Ferrari became expensive by 1 lakh. It's not that a billionaire will not buy. So even luxury product has been there. This is all there: coal, aerated waters. Okay, government has put motor cars, all of this. So GST compensation cess is levied on these goods. Now going forward to the next thing is your UTGST. Okay, now UTGST is also a very simple act. We just have to know what comes in the exam is the word state in article 246, 240. Nowhere they said union territory, they say state. So here we have said in UTGST, wherever the word state has been written, it includes the word UTGST. So when I say section 246, it will be equally revenue will be shared between center and state. So state includes UTGST. Then they say states, technically state SGST cannot be levied in UTGST without legislature. It applies to the following union territories. So these are the union territories: Chandigarh, Lakshadweep, Daman and Diu, Dadra Nagar Haveli, and Daman and Diu. So interestingly, when you see, Delhi is not covered here. Delhi is covered as a state. And all the provisions are there. So these are the union territories that are there: Lakshadweep, Daman and Diu, Dadra and Nagar Haveli, and Chandigarh. That's it. Delhi and Pondicherry, since both have their individual legislature, shall be considered as states. So market is important. They ask us in the exam that Delhi and Pondicherry have individual legislatures and therefore they are considered as states. Now we'll do the December 2022 exam questions. Are we good till here? Yes or no? Quickly we can start and complete. I've covered every single thing. Just do this, the yesterday's marathon, this marathon, everything I have covered. My Customs Act notes you do, everything will come from there. I've covered the module also. You just need to YouTube it, you will get it. Okay, and I want all of you all to like the video also. Okay, and comment. It feels very good, very motivating. Okay, let's start. Just give me 2 minutes and we will start with this. Till then you all can write good comments if you all want. I'm coming in 2 minutes. We are going to solve the entire December 2022. In 15 minutes this entire paper will be solved, and that's it. We are done for the day. Okay, so in 2 minutes I return and we'll solve this entire paper. Okay. So we'll be beginning with this part. And those who are from Chennai and surrounding places, if you all have not joined, go ahead and enroll here. It's going to be an amazing session. You'll learn a lot of things there. Plus, there are over hundreds of students who already registered. Okay, it's going to be packed. There are very few little places left. So go ahead, enroll yourself into this session, and I will personally be meeting you there. Okay. And this is the first ever time I'm doing, so I'm super excited. Okay. Now let's start with the particular paper of December 2022 we'll be solving. Okay, I need your help because I have kind of blanked out. Okay, so I need all of you all to participate. Okay, and tell me yes, no, whether you've understood or no. Are we good to go? Are we ready to crack this paper? Yes or no? Quickly, a yes, no, ready, good to go. I want you to get your calculators out. We'll be solving the entire December 2022 paper. Quickly, a yes, no, I need something, some kind of movement in the chat box so I know that you all are there listening. We'll be solving the entire December 2022 paper. With your help, we will be solving. Get your calculators out, get your book pens out. You will see the level of paper and you will see that I have covered everything. 2 days, my yesterday and today's session, I have covered full GST, IGST, UTGST, compensation cess, everything. Nothing will come out. Okay, great Ayushi, great Indumati, Mukesh, great. Let's start. Okay, please help me out where we get stuck anywhere. Okay, especially for the calculations, it will be a little difficult for me to do, but let's start. Now, Hi, so we'll be solving the December 2022 exam paper, the part B. Which of the following is not correct with the answer relating to GST Council? Now, GST Council question, first is they want to meet from time to time, they should meet. It's chaired by the Union Finance Minister, that's correct. And they decide the goods and services which are exempt. Yes, the quorum is half, not 3/4. So this is not correct. Then comes GST on petroleum, high diesel, etc. Will be levied from the date it is notified. Correct. So it is not levied at all. Levied from 1st April. Answer is petroleum and all this will be from notified date. Section number 9 subsection 2. Then comes the other thing, the sums. Okay, now this is the GST sums. Sum sheet I'm going to share in the WhatsApp and the Telegram groups. Please join there. Like that sums only will come. I've covered all the sums of GST in a small part. Now XYZ is the manufacturer opted for composition scheme. It includes taxable goods and exempted goods of this much. The tax liability would be. So what is it? There is a composition scheme. He is a manufacturer. Now manufacturer is a big player. So we take, if you remember, both taxable and exempted goods will be combined. So we will take 70 plus 80. So 1% of turnover, it includes taxable plus exempt. For traders, only taxable is to be seen. I have explained this in my lecture today as well, or yesterday as well. Now comes to schedule number 2, whether it is goods or service. Renting of immovable property of residential purpose is supply of services. So simple. Let's move ahead. Section 2 subsection 30. Now this is about that principal and composite supply. What is composite supply? Which is naturally bundled. 5-star hotel provides 4 days stay and 3 days night package with breakfast. Now whenever you have with breakfast, it is natural. You go in any restaurant. Now when I am also coming to Chennai, I booked Taj. Now in Taj they are giving this place. They have given free breakfast and all of that. That's a natural part. If we pack all of this canned burger, chocolate, these are all independent items which are clubbed together. Tie, watch, all this independently it could be sold. It's given. You can't give breakfast separate and night stay separate. It's as a natural course of business. Very, very simple, very, very easy. Section 2A, 10(2)A for a small service provider up to 50 lakh rupees, they get 6% tax they have to pay. Sir, beautifully explaining. Thank you. Okay, now Priyanka, a registered dealer under composition scheme. Now again, she should file the application form. She wants to withdraw. So for cancellation, there was CMP04. Okay, sir, you are told. I know that. I had only told you. Okay, that is important. GST is payable in respect of services rendered to an employer by an employee on services rendered to employer by employee. The employee giving to is under contract, employment contract, like contract basis, not in the course of employment. Wait, very interesting question. Pay attention. What are they asked? GST is payable when services are rendered by an employer to an employee on. So they are saying that employer is there. It's a trick question. And employee is there. Normally, if it is under the course of employment, GST will not be there. But here they are saying that in this event, GST is applicable. That means it must not be in course of employment. It would be in contract basis. Maybe some other kind of work is being done which is not in the course of employment. Clear till here? This was a trick question. Maybe someone would have got confused. Okay, but not us. We are here for exemption. If you want exemption, put the term exemption. That's how your mind gets trained. The relief is not the relief of not paying GST at time of receipt. And very important, I think I forgot to tell you, exempt. See, whenever we have invoice, all the regular taxpayers may issue a taxable invoice. Taxable invoice, right? All normal dealers will give taxable invoice. But if we have composition dealer or dealer in exempt goods, they don't give taxable invoice, right? Because they cannot issue taxable invoice. They make something called as bill of supply. So market is important. They can ask you in the exam. Bill of supply is where for exempt goods. Okay, sir. Noted. Bill of supply and for composition dealer is there. I just told because it struck to me. Relief is not paying by GST at the time of receipt of an advance under the forward charges is in case of the relief of not paying GST at the time of receipt of advance. Remember I told you in section number 12 subsection 2 that in case of forward charge, when we do LIP, last date, invoice and payment, by notification number 66, payment was removed. So receipt of payment is not there, not counted. This was in supply of goods. For services it was there. Now coming to Domino's, feeling hungry. I also not had lunch. I was in lecture for all of you all. Okay. So now let's see. Domino's sold pizza vouchers worth 5,000 to its customers. On this voucher is not convertible into cash and only usable in Domino's outlet. Now Domino's, it is identifiable. So at the date of issue it will be taken. So section number 12. Okay. So now it is a voucher of Domino's. I can identify. So what will be there? It has been issued. I'm finding where is the word issued. Sold on this date. Okay. On August. Was usable here. That he redeems here and on this date and on this date. What is the time of supply? 10th August. I told you. Why? Because whenever it is being issued in case of identifiable, so if it is non-identifiable, you can't identify the business owner, then it will be on date of redemption. Next, Indigo Airlines sells various products of packaged goods, chocolates to its passengers during the flight. It originates from Delhi. I told you it was section 10. I told you from IGST Act. The flight originates from Delhi, halts in Mumbai and finally lands in Chennai. Even I am landing in Chennai from Mumbai to Chennai. Okay, on 18th June 2023 from 11 AM at Dakshina Murthy Auditorium. Please go ahead and enroll yourself. The link for registration is given in the description of this video. What would be the place of supply of the production under section 10? It will be when the goods are loaded. We saw where the goods are loaded. So it halts at Mumbai and finally land. What is the given? That sells various products to its passengers on board. Originates from Delhi, halts at Bombay. This. What would be there? So obviously we will say location where the goods were taken on board. So this is there. Section number 10 I have told you. Then they have asked rule number 3(2)(b), which is about the option value in relation to supply of foreign currency. I have taught you foreign currency also, including the option to determine the value of foreign currency shall be deemed to be an amount exceeding 10 lakhs. So if it is 10 lakhs, we've seen 60,000 or this thing lower of A or B. So the option how they have done is 10 lakh rupees. I told you it comes in that higher bracket. So that category is there, this, or I can choose my the option A also, whichever is lower. So you can see I've taught that foreign exchange provision. Change in rate, very easy, very beautiful question. The rate changed from 12 to 18. From 12 it went up to 18. Okay, with effect from 1st Jan 2022. So I go to 1st Jan 2022 I went. Okay, now before this it was 12% and it went from 12 to 18. Now I don't know which rate to take. So now I need 2-3 things. Okay, I need which was applicable when the supply was there. Invoice was raised after the change in rate. Now see, they are giving which of the following is applicable when the goods service was supplied and invoice was raised after the change in rate. So change in rate, invoice and supply was both after the change in rate. So obviously if you remember, if both are after, then the new rate will be taken into consideration. Very, very simple, very, very easy. Okay, I have explained this beautifully. Okay, then comes Kabir. Kabir wants to start a new business of trading in Jammu and Kashmir. In order to expand his business, he through e-commerce site, through tax TCS section 52. In respect, he has approached you to seek legal advice for registration. See what I told you, if in your section number 24 compulsory registration irrespective of turnover, he requires compulsory registration. Doesn't at 10 lakh, 20 lakh, 10 lakh doesn't apply, required to mandatorily register as per section number 24. Next comes is a dealer sent some goods to another dealer on approval basis. Now approval basis is already I have taught you. Okay, in section number 31 they say that 6 months or approved earlier, whichever is there. If there's an absence of confirmation even after 6 months, it will be deemed supply of goods. Sir, amazing, you taught everything. I told you, I've not just authored a book out of thin air. Okay, next, coming to section number 15, subsection 2, interest, late fees payment, delayed payment for of any consideration for supply shall be included in the value of supply. I told you that section number 15, subsection 2, subsection 1 is definition of transaction value, subsection 2 is about trips. All taxes, all anything with the recipient has paid, incidental expenses, TIRP, P is for subsidies is there, and so any of this, whichever there, any incidental packing, etc., all of that is included. So this is also included. Section 15(2) I have taught you. Very good, very good, very happy. Okay, with my performance. Second is, as per section 24 of GST Acts, that is your compulsory registration, which of the following statement is true for casual taxable person? Registration is mandatory. Obviously this is absolutely true. Then comes a sum. They have asked a sum. Now sums are also very easy. If you've done my sums, which I'm going to share in the WhatsApp group, you'll be able to solve all the sums. He is engaged in the manufacture of taxable goods. ITC is available in the month of October for the following. Input this much. Now see what they are saying. Input 2,32,000, out of which one invoice on which GST payable was 60,000 is missing. So GST payable was 60,000 was missing. So obviously he will not get a credit from your out of which. So out of which, that means 2,30,000 minus 60,000 will be 1,70,000 only credit he will get. Why? because he doesn't have this thing. Now, if you read your section number 16, subsection 2, subclause A, it says condition is you should be in possession of an invoice, purchase invoice. You don't have it, you won't get credit. This much will be given, and 75,000 in which will be received in 5 installments. Second installment has been received. So this also you can get the credit only on receipt of all the installments. So therefore the credit available will be 1,70,000 only. Then comes block credit, section number 17, subsection 5. ITC on motor vehicles is allowed in the following. Now normally it is never allowed, except you have more than 13 passengers in that motor vehicle, or it is your business or your training, okay, or it is for transportation of passengers. So again, this is also there, this is also there, and imparting training. All these 3 is there. So C1 is right. All the 3 are correct. Okay, so we can, I hope you can take me in the exam hall. We can solve this really quickly. Okay. Okay. Now, next is, do you find it tough after my marathons? I very much doubt it. Okay. Today, yesterday and today you sit, you will get exemption. And my customs marathon, it's a classic which I had taken, which really till there is no amendment, you can refer that. There is no amendment, you can refer that marathon also. Which are the following is not a condition under section 16.2. So we have done all the conditions. Should be actually consumed by the recipient. Such a condition is not there. Then comes your rule number 36.4 of the CGST rules. ITC in respect of debit and credit notes have not been uploaded and not reflected under 2A shall not exceed 5% on the eligible credit in respect of the available invoices. So now just this is one, they've asked one dirty question. It's okay. So maximum is that much will not be allowed if you don't have it. Now let's see, determine the amount of input tax credit admissible to PQR in respect of the following goods procured on this date. Used in the construction of additional floor building, this much. So this is normally not allowed, right? When we read block credits, when you are using goods to construct a immovable property, this is not allowed. So unfortunately this will not be allowed. Okay, block credits, go and see construction of immovable property, not allowed. Packing in the case of factory, this will be allowed. Destroyed due to natural disaster, not allowed. So only one is allowed, that is your 8,000. So very, very simple. You are solving it really quickly. Okay, I think in half an hour I would have got up and left the paper. Even you all would have got up and left. Okay. Next is ITC as credited in the economic credit layer can be used for only payment of tax. Cannot be used for payment of late fees, interest or penalty, etc. Very, very simple. Very, very correct. This is done. Why are they asking such kiddish questions? Okay, and these are exam papers of December 2022. So simple. Now, X of Jaipur registered purchased goods from Kolkata unregistered dealer this month. So obviously, if he's unregistered, no ITC, ignored. He sold the same goods to Z of Kota, a registered dealer, and a profit margin of 120 on purchase cost. So he purchased for this. He sold at 20%. So that means he must have sold for 12 lakhs, right? 12 lakhs is the sale amount. Now ITC will not be given because obviously it is he bought from unregistered dealer. Purchase cost. GST on such goods is 12%. Compute the GST payable. So very, very simple. I'll remove this much. Payable how much? 12%. 6%, 6%. How much do you get? 12 lakh. 12. It's very simple, right? 12 into 6. Into 6%. So beautiful interpretation, excellent. I think I should be in teaching industry. Okay, so this is it, perfect answer. Now second is, I told this very important. Can anyone tell me the section number for job worker quickly? What is the section number? I doubt you. So very simple, section number 19. If you see for job worker, they say 1 year for inputs and 3 years for capital goods. So this is 1 year. If it is not returned, then whatever GST taken, credit taken has to be reversed. That is what it was given. Section number 24. Compulsory registration is not available for agriculture. Where we tell agriculture is to do anything. Okay, they got a lot of exemptions. Moving ahead, a dealer is not a resident in Manipur. Has a place of business. He's a resident of Manipur. Has a place of business in both Manipur and Himachal Pradesh. Okay. His taxable supplies of goods in the Manipur is this much, and in that of this is this much. So he is selling 12 and 6. from where he has to obtain registration. So as per section 25 subsection 4, a person has to have registration in all the states that they are operating. So he will have to have in both. Very simple, very basic question they are asking. Okay, to a dynamic personality. Okay, rule number 21 of CGST rules 2021, the proper officer may cancel the registration, it's a heartbreak, of the registration certificate who has taken voluntary basis if he has not commenced the business within 6 months from the date of registration. Nothing facts you have to learn. Again, I taught you this also. Normally it will be 45 days. Remember when we were doing the invoice should be made within a period of 30 days, but if it is not made, then this that. So 30 days was the normal cases. For NBFC, insurance company and banking, it is 45 days. QR code, okay, code is applicable to suppliers whose invoice to unregistered person is exceeding 500 crores. So this is a fact, you can remember this QR code, just do some Google up for this. Is applicable to suppliers who issue invoices to unregistered deal exceeding 500 crores. Okay, for this I told you e-invoicing, remember this is just somewhere connected with it, it is 10 crores now. And now it is actually 10 crores is what you have to remember, but now it has been so closely amended that 5 crores is the limit. You have to write 10 crores for e-invoicing. Rajendra is a registered dealer under GST, supplied the exempted goods to his customer within the state. In this case, he shall issue a bill of supply. I told you they always ask this, that if he is he's supplying exempted goods or he's a compensation dealer, he will give bill of supply. Then comes to the next thing is e-way bill. E-way bill in how many days? So every 200, see, e-way bill has to be generated even before the transport. Once the transportation is there, then for every 200 kilometers, 1 day validity bill is there. So let's see, on the movement of goods is on 22nd March. For destination of 600 kilometers from the place of dispatch, e-way bill is to be generated till, so 3 days, right? So he will get 3 days. So 2nd March is the movement of goods, means he has to generate even before that. So 2nd March, 3rd March, 4th March. Answer is 4th March. Clear? Why? Because movement has already started, means that is there. That means he must have already filed a e-way bill earlier. So from 2nd we will count 3rd, 4th. So 3 days he will get for 200. Then which of the following is not a type of ledger prescribed by the government? There are only 3 types of ledger: liability, cash and credit. Liability, cash and credit. And this guy is a imposter. Okay, this is not anything mentioned like that. Then they've asked a very basic little cute little question, which I believe even you can do it. Okay, cash ledger, subtracting this, has a credit of 4 lakh rupees. And the same month as the output tax liability of this. So credit of C, credit of S. Why are they fooling us? C and S have a there's a breakup between them. They don't talk, they don't exchange anything. So unfortunately we won't make them connect. C and S, no cross utilization allowed. So how much they have to pay? Obviously liability is 3, they will have to pay 3. Such a beautiful easy thing there. Okay, then they ask for this also is there, you can get it, I'll share it with you. Special audit, very important. I've told you special audit and general audit also. Special audit has to be done within a period of 90 days. Section 56, refund has to be, you will get a refund within 60 days. If not, you will get a 6% interest. Then they give you a baby turnover question. Turnover definition in the law is given under section 2. Subsection 6, which says TIEE. It includes all taxable, interstate, export and exempted goods. All you will add. So it's very simple. I will add intrastate, exempted, export. I will add. And this payment is not. This is an inward supply. I have made payment. It's not a sale. So all of this will be added. So when you add up 10, 12, 2, so 22. So that's it. This is the answer. It's pretty simple. And UTGST, I told you the highest prescribed rate is 20%, 20% for CGST, 20% for SGST, 20% for UTGST. This is the highest rate that can be applied. For IGST, it is a combo, right? So 40% is the highest rate they normally keep asking, and that is it. Okay, we're almost done. From 90 onwards, generally customs, the following liability cannot be adjusted against the input tax credit of UT GST. Obviously, C cannot be done. UT can be set off against UT, and I can be set off for this. C cannot be set off against this. That's it. And then all comes provisional. That's it. GST compensation cess is applicable to whole of India. The nominal growth rate for this GST compensation cess is 14%, and then we see the basic custom duties, etc. So I have covered the full December 2022 questions. I have covered the full GST laws. You are safe. You have nothing left to do. Just watch these marathons, flip through the past exam questions. I will be sending a sum sheet in WhatsApp group. Please go ahead, join it, don't miss it. From there only the sums will come. Okay, all the types of sum that has been asked has been covered and very nicely put up there. So I've made it. I'm going to share it with you. I've completed the entire marathon. That's it from my end. Okay, yes, don't worry, sections if you want to remember, just learn, watch my marathon, you will learn. It comes through over a period of time. So don't worry, you will be good. All of you all like the video, share it with your friends, tell it to your friends. Even in the exam centers, when your papers goes beautifully, please inform everyone, okay, that I could be able to help you. All the very best. Okay, thank you so much. And in case you feel that how well I could help, I've authored the book, available on Amazon and Flipkart. Okay, and I'll see you all personally at the Chennai session right after your exams. Do come with your friends. Okay, I'll love to meet you all. Thank you so much. All the very best. Keep smiling and score well. I've helped you till the very last moment to get this last edge and clear. Okay, thank you so much. Take care, guys. Bye. Do share this with your